example, this could be the sort of a
barrier
reversal. In other words,
no,
sort of something
I needed one more
a little bit more meaningful, considering some of the big
stacks.
moves we're seeing today. I mean, look at Salesforce service now is
I thought I could get one
up quite a bit today, and it's been up all week.
I almost baited him with the barrier.
In other words, in the last 20 trading days, has been up significantly. So we could be seeing a slowdown in the hardware elements, the semiconductor names. Doesn't mean they're going to go down. It just could mean that there's simply a rotation happening. The other thing is there's a broadening out, healthy broadening out. If you look at transports, recently touching some new highs, equal weight S&P also touching highs. So a little more healthy balance in the markets, broadly speaking, than not. Considering the concentration we've really seen since the late March lows have been really focused on semiconductors, and now it's rotating in other areas of the market, including transports, but also software.
All right, thanks, George. George Sillis, our senior markets correspondent. Have a great weekend, George. Time now for our ETF watch list segment. Joining us for that is Lance McGray, Managing Director and Head of ETF Product of Advisors Asset Management. Lance, thank you so much for joining us this Friday. Happy Friday to you. Looking at the move on the 10-year, we're pretty steady. We're just off by a basis point on the 10-year right now.
How are you so lucky?
We got what appears to be some progress on U.S.-Iran ceasefire talks. It kind of reiterates some of the headlines that we saw yesterday from Axios and beyond. President Trump has made some posts on Truth Social about this. Yes, I'm sure you saw those posts, where it sounds like
Galio's fed now and stacking on, so he might actually be able to shut
Talk to us about your take on where we are with regard to the war with Iran and possible
we can still kill him.
And how you're seeing that impact the markets.
Yeah, well, thanks for having me. Again, I certainly don't have a crystal ball. I think everybody's seeing the same headlines, the same tweets as everybody else. But here at AAM, we tend to think that there's certainly no shortage of uncertainties.
We don't want to push out because we know Nocturne is just going to
topics to discuss on the macro front. But we've really narrowed it down to three major items here at AAM that we think are really impactful for investors, at least in the short term. And you sort of mentioned it, is the war with Iran. More importantly, what's it going to do with the impact on energy prices and inflation? And then number two is really the knock-on impact of interest rates. What if inflation is sticky? What does that mean? We've certainly seen elevated levels of volatility in the bond market. You kind of alluded to it already. But on the bright spot, the third thing we're really looking at is earnings, right? And massive AI spend. And those are really the three things. So again, coming back to the war,
just because they
certainly don't have a crystal ball, but it'll be certainly interesting to see what happens over the next few days.
Okay, so what do you think this says for the direction
they're always going to be
rates
together
from here?
Because they're so scared of me.
Yeah, so let's start with inflation first, right? Here at AAM, we've sort of taken the view, even before the war, that inflation was going to be sticky, right? And we thought that the inflation numbers were going to be settling in, slightly above the aggressive 2% set by the Fed, right? So, if you think about a 2.5% to 3% inflation rate, that's honestly, it's quite normal. And history shows us that the markets can do quite well in that type of environment. We change gears a little bit when we think about interest rates, with the idea that our sort of assumption is that inflation is going to be sticky. We think interest rates are going to, the Fed will keep
if I roll bot, Galio's going to be
which means that there's going to be obviously some
I think I can kill them. The thing is, Galio's building straight up full tank armor.
But again, we think interest rates, at least on the 10-year, between 4.5% to 5%. That's not abnormal. What is abnormal is the zero rate environment that we sort of been accustomed to, and we'd argue we're just in an interest rate normalization period. We're closer to being done with it than we are not, especially if the war sort of subsides in the next few days or weeks.
When you talk to clients, what's their biggest worry right now?
Well, right now, I think there's a lot of obviously uncertainty, but with uncertainty brings opportunity. We talked about interest
Galio's
rates,
probably coming down.
and one of the things that's front and center for many income-seeking investors is, how can I capitalize on these elevated levels of income? How can we do that in a manner where we don't take on a tremendous amount of duration risk? Right now, we're, luckily the front end of the curve is quite steep, and it's providing a great opportunity for investors to essentially stay on the shorter end of the curve, manage in that short duration and intermediate arena, and provide excellent returns and income profiles to support their long-term
Yeah, that
goals.
Galio hurts.
All right, Lance, we'll have to leave our conversation
I just
there
can't
for
do much
time.
damage to him
That's
because of his
Lance McRae
W.
of Advisor Asset Management, AAL.
Maybe we can win this
Appreciate
fight
your time.
here.
Have a great weekend. Coming up, we'll take a closer look at some of the large options trades to watch in this market. Tom White will join us with a closer look at big moves for NVIDIA, Microsoft, and American Airlines. The watch list will be back after this break.
I could have picked up the show, I think I'm dead. Oh, I'm alive.
The final
I'm a
9
liver.
minutes of the trading day.
Yeah, I forgot the old
Markets
show.
make headlines and
From earnings shocks to sector rotations, we're
Wait,
tracking the
I lose, but I would
catalysts
just
that
die.
move markets right into the close.
here on the floor, I bring you real-time sentiment. Traders
I
driving
think I
the
need this,
action.
though. They just have
And
so
in
much...
Chicago, we break down the data, technicals,
CC.
and trades so we
Live coverage of the close every single
They
day.
got all these rows.
This
They got
is
one.
Market on Close, live weekdays, 3 p.m. Eastern, only
I guess
on
the only
WILE
issue
Network.
is my team is all getting smoked in every lane. And I
I'm
have to
Sam
fight
Vardis
one
live from the New York Stock Exchange. When the market moves, we're on it.
But at least
Getting
the game won't be a
reaction, the
15-minute
strategy,
FF.
and sentiment in real time.
But it's going to be very hard to play
Stream
because
Schwab
Nocturne
Network at
and Galio just countered me. Galio's going full defense, Nocturne just presses R. What if I get the right fight?
Trading at Schwab is powered by Ameritrade,
And they have T-Mobile.
giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders.
They try and fight us.
And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Probably just going to go for my turret.
Welcome back to the watch list. Time now for big moves, where we highlight outsized options trades taking place in the market. Joining us now for that is Tom White, co-host of Fast Market. So let's talk NVIDIA. It's actually
He
seeing
actually
shares
gets
move
a
higher
rare.
today. Just want to check and see if it still has a gain. It is. But you found a bearish trade. Talk us through that.
Yeah, not surprising. You've seen a pullback in the shares, about 8% from those all-time highs that we saw
You did half
earlier
of her
this
health.
month. Above $235 a share or so. And this
Excuse me,
typically
don't have
happens
that
after
good of
earnings, even though our revenue growth was 85% on a year-over-year basis.
much
That
we
was our
have
strongest growth rate in over a year. But you look at valuations; they're starting to get even cheaper just based on what they did on earnings and then the guidance that they provided also. So it's trading about 23 times forward-looking PE over the next 12 months. So it's cheaper than its competitors at this point. Jensen Huang is going to speak in Taiwan on Monday. Maybe that'll be a catalyst.
Fight where I'm not
it seems
instantly
like
popped.
everybody's taking advantage of what's going on in AI. The pixel of AI, which is NVIDIA,
Perfect.
Seems to be
Finally a
lagging
fight
just a little
where they're
bit
just hitting
here.
my
So
teammates first
maybe
instead
that
of me,
bearish
so I'm not
tint
CC.
that this trader put on today
hero
is
minions.
expecting maybe some more downside in the stock over the next week. This was out in the June 5th weekly cycle, so it's just 7 days to expiration. The trader bought over 10,000 of the 215 strike puts, paid an
working
average
the turret.
debit of about $4.50
does the
on those
damage to the
puts, so
turret,
that's
so I'm
what
a
they're
turret
risking
shredding machine.
per put that they purchased on this. But it takes your break even down to $210.50 over the next week, right? That's only about 3% below the current share price in NVIDIA. So it doesn't doesn't seem like it's a hedge. It looks like an opening type of position where this trader thinks, hey, over the next week we're going to see some weakness. Now, remember, NVIDIA is lagging a little bit. It's off of those all-time highs, but this gives them exposure to the downside in case NVIDIA or maybe the entire tech trade maybe pauses, maybe pulls back a little bit. Maybe it's warranted at this point because RSI levels in the NASDAQ 100
I might
and a lot
need
of those
collector into LDR
are severely overbought above the 75 level for the RSI.
All right, let's talk Microsoft. That one's another one that's swinging to the upside more than NVIDIA. You found a bullish trade here. Walk us through what you found.
Yeah, trying to play some catch-up here today with the shares up over 3%. Now, we're still in bear market territory in Microsoft. It's still down over 20% from those all-time highs that we saw at the end of last July. So making some inroads here, though. It's having a nice month here, up about 8% with these 3% gains today. This has been kind of left for dead here a little bit as far as the tech trade and the Magnificent Seven names. That is based probably on the enterprise side of their business getting
I could pick this up
taken down with that SaaS apocalypse that we've seen. But it's made a little bit of ground up, and the valuations on a historical basis are one of the cheapest levels, even with the rally back that we've seen so far this month. I did see some bullish activity in here, and this was out in the June 26th weekly option. So about 28 days expiration. Trader bought over 12,000
at least I got the Herald.
of the 455 strike calls above the market. They paid an average debit of about $10 for these calls earlier this morning. So that break even of 465 over the next month is about 5% above the current share price. So this trader thinks we're going to see some continued gains here in Microsoft, which has been one of the laggards in the tech sector.
All right, and outside the tech sector, you found something over in the airliners, American Airlines, a bullish trade here. That's not trading higher today. Walk us through what you found here.
Yeah, it's trading higher this month, up 26% so far in the month of May, even with crude oil prices significantly higher than where they were, 5 months ago, 4 months ago or so. So I think a lot of these airlines, Delta Airlines hitting all-time highs today, United Airlines just below all-time highs. Americans been the laggard, right, because they've got the worst balance sheet, and they're not taking as much advantage of the premium and business class and international seats as some of the competitors in this space. But I think a lot of traders and a lot of investors are looking at the airlines thinking, hey, if crude oil continues to move lower, that's only going to benefit.
Oh my God, he even used this on me.
But we did see some bullish activity.
He's so mad,
this was
man.
the June 18th monthly options
He got outplayed so hard. His sole purpose is just to build
of the
against
16 strike calls. Paid an average debit of only 31 cents. There's not a lot of option premium in this low price stock. So the break even for this trader where they start to profit is above 1631 over the next 20 days. That's about 10% above the current share price. So you're going to need a move on a percentage basis, but it's less than $1.5 on a dollar basis for this move for this trader to start to profit on this type of trade. But I think this is one of those names and the sector that's waiting for crude oil to continue to move lower and maybe get some resolution to the conflict in the Middle East, because that's when airlines will probably get another leg to the upside.
All right, good stuff there. You also got analyst activity around this one. Deutsche Bank maintaining a buy, raising their price target to 18 on American Airlines. Thank you, Tom. Appreciate that. Still got some green on the screen as some bullish investors try to achieve another record for the S&P 500 at NASDAQ. But there's pushback on that. We'll continue to keep you abreast of if
Get out of here.
for May. Thank you so much for joining us today on the Watch List. I'm Diane King
Let's
Hall.
go.
Download the Schwab Network
thing
app.
is, he had
Available
no
on the App
damage.
Store and tune in 24/7 on schwabnetwork.com. Stay with us. We've got Mark
So my swing and my show gas. My team's strong enough to survive.
Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features details of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I can 1v1 Nocturne, but Nocturne can ult in, and then Galio can ult, and then I'll die.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
Wow, I have
From the
18
opening
more.
bell to the closing bell, we've got you covered.
Get inside the minds
I
of
literally
pro
just need
traders.
My point is that they're getting
anybody to
a
just
higher rate
go
of change
in
in sales
and
based on
tank
their
the
guidance,
enemies,
but
and
not the
I'll
same rate of change of PPF.
Follow the
But if I
biggest
have to eat the
headlines,
CC spells,
live
I'll be
analysis,
fine.
breaking news, and sharp trade ideas minute by minute.
But the Edge of Night, I think,
Shows
is
up for
going to
action, and we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a
we gotta be careful. We
risk-defined
gotta run.
way here going into earnings.
So that would be a further downside area to watch.
Live insights.
Oh, Vega at least got it.
Data,
Nice.
veteran traders, and trusted financial journalists streaming live and on demand.
Oh my god, he died in 2 hits.
Any screen, anywhere, free. Schwab Network has destroyed a turret.
Mom, when my grandparents were here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world.
Let's go. The Cho'Gath used my ult perfectly. He knocked up Nocturne.
25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with that can help give my family a happy financial future.
Wish I could see how much damage.
Stay connected to what
I
moves
mean,
the
it only
market.
does 100.
Download the
every time
Schwab
it
Network
activates,
app
but
and
it
stream
activates a lot.
anytime wherever
What am I
you
going
are.
last? A little late for Hubris. They have shields? Not really. I don't think I really have anything else to go besides the Hubris. I could go like a defensive item or a bruiser item. I think we're fine. We've all scaled. He does damage and he survives. And Swain just needs Leon. He needs mana. That guy died so fast. I want to try and go full intelligence like Storm.
Happy Friday, everyone. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Bardas, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll break down Dell's quarterly report as AI revenue propelled earnings past estimates and shares hit a new all-time high. Then we'll be joined by the team from AstraZeneca to discuss the company's role in the cancer research market as it kicks off the world's biggest cancer conference today.
I don't know if we'll be able to get
and we'll
this
discuss
dragon.
what the pause in the Iran war means for the market and the potential for
Yeah, we could trade it for Baron, but they're all
Marley,
coming up.
what have you been watching today?
The first one you just mentioned there, Dell, soaring to a new all-time high today after a blowout quarter with results driven by revenue growth of nearly 90% and an increase of more than 750% in terms of AI-optimized servers revenue. The company's COO highlighting the role of AI, saying, quote, the opportunity shows no signs of slowing, and neither does momentum for Dell today. Okta also higher after its beat and raised quarter. The identity management company said that AI accounted for about 35% of its bookings, with its RPO rising 16% year over year. And NetApp hitting a new all-time high today as well.
That's why they're
Strong
doing it. They're
Q4
setting up
earnings
some
and bullish
strategy.
guidance. The double-digit move to the upside sent shares above their 2,000 level highs and officially recovered all of its dot-com bubble losses. So following in Intel's footsteps there. Lots to break down today, but before we get to all of that, let's check in with the markets as we're about to wrap up this trading month and this trading week. On the S&P, we're still holding in the green. We're about 0.1% higher at 75.7169 right now. About the same on the NASDAQ. We're at 30,256. On the Dow, we're 0.5% higher, a little more. 285 points we've added today. 50,953. The Russell 2K has been lagging for most of the day. We're down more than 0.9% at 29.08. On the 10-year, we're at 446, just slightly higher than we were this morning. The dollar at 98.86. Gold is up more than 1%, $4,584.30 per ounce right now. Crude oil holding firmly below $90 a barrel. We're at 87.63 right now. And Bitcoin staying in this range, 73,480 right now for the cryptocurrency. I do want to check in with Sam, though, and see what's sticking out to her today, because we're wrapping up our short trading brief, we're wrapping up the month of trading, and it's certainly been a busy rally.
It certainly has, Molly. It's so much for that old Wall Street adage, sell in May and go away. The S&P 500 on pace for its ninth weekly gain here, the best since 2023. I just saw the most new highs since 2013. That's 11.
Did I just like crit every auto or something? Why did I just
for its
do so
biggest two-month percentage gain since 2009. Apple is headed for its 10th weekly gain here, the first time since 2009 as well. And you thought software was dead? Well, the IDV software ETF is on pace for its 7th weekly gain, up over 35% during that time. What really stands out to me about the rally today, though, is you've got most of the 11 sectors actually in the red. So technology has been doing a lot of that heavy lifting today with this big move in Dell, as Marley just said, but also chips and softwares rallying alongside each other. You've also got a lot of that strength coming from cybersecurity names. And it comes as oil is headed for its biggest monthly drop since 2020. WTI down about 10% or so this week on the optimism around these Iran talks. The market seemingly shrugging off the latest comments from Exxon and Chevron, both warning about shortages and the potential for prices to spike in the coming weeks and months. But I'll send things back over to you, Marley, and Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. We have lots to get to today. We've had a lot of huge moves off of earnings today. I mean, we've seen some nice positive action, but we had double digits in the high 20s, low 30s today on several names, one of them being NetApp.
I know another name with a new all-time high today to close out the month up 62.5%.
I don't think we'll lose
Actually, it is one of the best. It's, I believe, the 6th best performing stock in the S&P 500 for the month now. But this has become a very critical company in terms of infrastructure for enterprise data, helping companies basically store, secure, and move it and utilize various tools within, of course, the broader like AI and cloud environments. And so they're executing very much seemingly well in the broader AI and hybrid cloud cycle, delivering accelerated growth, margin expansion, and strong cash flow. So top line growth was up 12% year over year. We did that cleanly beat expectations and marked this really nice continued momentum. Non-GAAP earnings did come up roughly 26% from last year and above the high end of their guidance. Well, growth was hugely driven by their AI infrastructure demand, as well as all-flash storage and cloud services, with all-flash revenue up about 18% this quarter and over roughly 1,100 AI wins for the year.
I do have another
Margins also expanded meaningfully, and free cash flow surged over 40% year over year. I mean, you really cannot find a stronger report. Now, component costs were one concern, especially in relation to NAND. That does remain a pretty big risk now to product margins as we approach this next fiscal year. But the strong reaction, I'd say, was uneven. There were some things that at least expectations were already elevated. Some analysts said, you know, like, how far can this further run? But I think it's the case to be made for anything right now that is in like AI or software. We're seeing huge moves to the upside and, of course, swings to the downside. But it's really hard to sort of gauge like the component costs again associated with memory. Right now, they're in the right place at the right time. I mean, being storage exposed is why they're positioned so strongly as we approach the month of June.
I mean, a really nice move. And I was looking this morning to see if it was going to surpass its record that it set in the year 2000. It just had to get north of $148. I mean, we're at nearly $180 right now with this 25+% move. And as we move to Okta, to talk about Okta, also up about 26% on its earnings.
I know, I feel like these moves like the actual volatility, you don't even actually see it in the overall market, but with some of these names you are. And so Okta providing a really, I think, welcome reminder that the move we saw earlier this week in Zscaler was not necessarily a wide cybersecurity concern. It was a Zscaler specific story because Okta is much more in that broader cybersecurity space. So sure, surging after first quarter really results that clear expectations on both top and bottom lines. We did see revenue reach $765 million, well above above the street's expectations. Their subscription backlog, or RPO, climbed about 16% from last year, while the near-term portion of that backlog, known as CRPO, rose another 12%.
And see how this has two stacks on it? If I throw a Q through
25% of their total revenue. That shows some pretty meaningful operating leverage. And the company also raised its full-year outlook, lifting its fiscal 2027 earnings estimate as well as revenue expectations. I mean, well above prior estimates. So analysts responded very quickly.
Because they got
price raises, at least as far as these several analyst notes that I saw, as well as like BTAG bumping its price target to 119, Needham raising it to 120. And it's amazing, with today's momentum only continuing, now these price targets almost look stale.
Doesn't do damage.
Obviously, I mean, surpassed a lot of just even like the more optimistic targets for the next 12 months. So the one concern is execution risk, and I do know that there's been, again, an unevenness in broader cybersecurity, but I think really interesting, especially as we approach next week. I believe it's CrowdStrike's and Palo Alto Networks still reporting. It has been a very haves and the have-nots in specifically cybersecurity this quarter, but thankfully for Okta here, definitely in the winning camp.
Yeah, certainly with this night. I mean, it's held on to this nearly 30% move throughout pretty much the entire session. It's been somewhere between 26 and 34 pretty much all day long. Really nice pop to the upside. I'm glad you point out, too, that Zscaler was not more indicative of the entire sector, because we are seeing different moves in different names. Just they're just in the other direction. Almost about the same move, though. But as we look at software, talking about huge moves here as well, we've got another 5% pop in the IGV today. I think overall on the month, we're up close to 20% just on the IGV alone, but we've got double-digit moves in a lot of these software names today, too.
I mean, it's been a phenomenal thing to witness, just when you reassess. I love to look back, especially on a month like this, when we're obviously closing out a very winning month for tech, to see like what happened. And obviously Dell, today's move really alone propelling it to now be pacing for at least to close the S&P 500's best performer, Micron number 2 at 85% higher this month. Datadog up roughly 84%, and Supermicro another 67%. CrowdStrike also 63% higher. So there's right now, when you assess the monthly gains, only 3 of the 11 S&P 500 sectors are actually higher. IT out in front hugely, up 15.5% this month. Again, being one of the 2 sectors higher just even today, and so it shows the unevenness that has been the month of May for software and a lot of the more tech-exposed names. AI has been seen obviously as this pretty significant threat to software margins and moats, but in May that did definitely flip, with investors more buying into the idea that this enhanced software model with stronger pricing power and productivity could actually be a catalyst, and that basically AI can act as a friend, not a foe to these software names. So that again would have been better to even, which is encouraging. It's not necessarily going to be the rising tide that lifts all boats. I think that we knew from like 2024, 2025 for tech, but the biggest shift was really this participation that has widened across, like outside of just memory. We're seeing that participation now today in like hardware, for example, Dell, HPQ, as well as cloud infrastructure, and massive hyperscaler capex in AI and clouds is also helping flow down
the only one I'm really worried about this game
demand. And so the concern is that software has seen a valuation reset, and now we're coming back a bit here. Like a lot of the public SaaS multiples have fallen to now recover.
But NASA's wither
and again, they're still actually below some of their 2024 levels, but many saying this is just more of like that momentum rebuild, less pure strength in software. I will be very curious to see what, though, the month of June looks like, because as the adage goes of like May pressure, it has not been the sell in May and go away type of performance, at least for broader software and tech.
Certainly not. I mean, just looking at like some of the options action today, I was looking just specifically at the IGV, and traders bought more than 50,000 calls, only 6,000 clicks that I could find. If you look specifically at some of the big name moves we saw today, ServiceNow, Salesforce, Oracle were all popping higher. Their call option volumes outpaced puts by a factor of 5 when I was looking at ridiculous earlier. I mean, it's just wild to see how battered this sector was, and then the explosive rally that it has been on since then. But I didn't mean to use explosion as my pun here, but I did give myself an accidentally perfect transition to our next one. The space stocks under some pressure today after we had an explosion that was meant to send some Amazon Leo satellites into orbit, but it didn't make it off the launch pad.
It did not. So sticking with that explosion theme here, we did see Blue Origin's New Glenn exploding during a test event, which I think is an important detail here Thursday evening with its expected launch next week. Obviously expected to now be very much delayed, but the reason has not been clear yet. They did say they experienced this anomaly and that all personnel have been accounted for, and they will be providing updates as they learn more. Jeff Bezos did a post on X earlier saying that while this was obviously not the result that they wanted and very disappointing results, that they're going to continue to move forward. But this does now create incidents for those who need Blue Origin's capacity to execute on their business models, some of those being obviously Amazon, but another name being AST Space Mobile. So both companies are using Blue Origin to put commercial communication satellites into space. This could obviously create some cost delays. In the case of AST, it does push out the time to realize its billion-dollar sales backlog as the business is coming from like some of these wireless network operators like Verizon or AT&T. But it was depending on New Glenn to achieve its target of roughly 45 satellites in orbit by the end of the year. Now, per one analyst, one firm, William Blair, they said that could now be utilized by SpaceX's Falcon 9 instead. And so Amazon's also targeting thousands of satellites in space this year, more than 3,000 by 2029. Now many say this is not going to happen. They're going to probably have to file an extension of the SEC, and launch capacity is getting tight. So we're seeing more and more competition emerge in the space where we just don't want to have a failed launch event, frankly, even if it is just a test. There is, of course, then the upside this could provide to like SpaceX because this very much competes directly in the satellite world. But it's interesting to see why this is weighed on a name like AST Space more than, say, like Rocket Lab, which have launch capabilities, but also does not necessarily utilize the same Blue Origin technology that, say, AST will. So seeing a move has been pretty consistently to the downside, but AST is really the one taking on today. As of course, the launch was a non-favorable outcome for Amazon and Jeff Bezos.
And also want to add, no one was hurt. Everyone is fine. Jeff Bezos came right out right away and said there were no injuries. The launch pad was critically damaged, I think was what he said. But interestingly enough, you know, SpaceX also just had a mishap just on May 22nd, I mean, just last week.
Which we just brushed over.
So there have been a few of these, but the space stocks were already flying so high on the month that this 5%-ish pullback was not going to put a huge dent in their rally. Thank you, Jenny, for breaking all that down. Have a great weekend. That's Jenny Hornock, co-host of Next Gen Investing here on the network. And I do want to check back in with Sam for a look at what we have coming up in the rest of the show.
5-kill lethality.
Well, Hyperframe researchers Stephen Dickens is going to join us Molly to break down earnings from Dell as shares surged to a new record high after that blockbuster report. We'll discuss coming up next on Market on Pose.
I don't really like this item. I would much rather just build one of these.
Hey, investors, you know the market moves.
I get it that they want
Schwab is here to help you move with it.
It's kind of awkward.
Whether you're buying, selling, holding, or planning. Whether you're ETFing or 401k, saving, spending, or even retiring. You can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest
where there's going to be
your
so dead
way.
weight on me, though.
Sounds nice, right?
Because I won't even be able to jump.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of
for the
growth.
second
Big movers, real-time interviews.
I wasn't really expecting him to just all in, but that's what he did, and that's actually the smartest thing he could have done because he actually almost got me.
2 p.m. Eastern, only on Schwab Network.
How scary he is.
Sometimes, you know.
Oh, yes.
You could have done better. Same goes for where you invest.
So more
Level
treasure
up and invest
for me.
smarter with Schwab.
Real-time access,
Ari's
data-driven
tilted
analysis
from dying to me. Now NASA's is tilted because he had to lane swap and then die to me.
Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Look at this. Does 500 damage. This is more than anybody's ult in the game, I think, right now.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad
Maybe Evelyn ult would do more than 500 damage if they're
branches in the area.
Execute
He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me.
Now NASA's
advisor, Jennifer, she was with me.
I guess Cleanse, I mean, he ghosted at
Like, planning with their college educations. Someday it'll be their turn.
Oh my god, 700 damage.
Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters.
I think I can outsmite
We're
my
approaching the closing
jungler
bell
too.
for this shortened
Depending
trading
on how
week
many
on this
stacks I
Friday.
get on
So about to start the weekend. So let's just check in with this small rally we're seeing for the S&P 500.
All right, I might have
take it
almost
because we're
lost
still
it,
looking at record highs here for the Nasdaq 100 as well, putting on around 0.25%. The Dow Jones is charging ahead to over 300 points right now, 0.7%. It's the Russell that's the laggard on the day, but really a lot of this has been driven by technology. That's what's really doing the heavy lifting today. In fact, the Nasdaq up around 8%.
Dude, I do so much damage.
15% gain in April, as I mentioned. That would be the biggest 2-month percentage gain that takes us back to April 2009. And you've got names like Apple, as I mentioned earlier, which have been on these winning streaks as well, as far as 10 weekly gains here. So a lot of it coming from the chip strength and also the softwares today, cybersecurity names as well. You do have actually most of the 11 sectors, in fact 9, underwater right now, all but financials and green shoots today, which is helping get us to these highs, keeping us at these levels right now. And of course, a lot of the optimism is being fueled around the optimism around the hopes of the negotiations.
I don't want to die to Nasus
We're
because then
obviously
this game
waiting for any confirmation from President Trump as he has got to sign off on this extension of the truth, which was reported yesterday. So we are, of course, looking at oil at $87 a barrel, and that is helping continue to put the wind in the sails of these markets. And we just take a look at some of these other futures products.
It doesn't matter how fed I get.
That's really the story that's driving things. But the US dollar's been coming off a little bit as well.
That Nasus hits a few items, withers me, ghosts, and runs at me, and
as we
hits me
continue
with
to see
3 Qs
at these 6-week lows, and that 10-year yield picking up just a smidge, but we're still at 446. Not the kind of levels we were looking at last week. But it's safe to say, given that 10% pullback we've seen in WTI crude this week, we're still not that far back on the 10-year yield. When you take a look at the levels we came from, we're still looking fairly elevated, which perhaps expresses just still maybe a little bit of skepticism and just a bit of a wait-and-see type of approach to what is going on with the Iran story right now, and of course the inflation picture. So we'll get more of the job side next week, and those PMIs will start to come through as well. So we'll keep an eye on that. But let's bring Marley back into the conversation now and turn our attention to Dell.
And then I can get like
was off the back of these blockbuster earnings, this 30% rally we're seeing today. We are joined by Stephen Dickett, CEO and Principal Analyst at Hyperframe Research.
LDR is only going to work
Always
on
nice to see you, and happy Friday. Look, we've spoken about Dell to death, and we will get to that, but I just wanted to ask you a question. I know you're not a markets person per se, but you cover so many technology companies. What is with what we've seen this week? I mean, I'm not just Dell. I'm talking about Snowflake, 36% rally.
That actually charges up pretty quick.
20% rally
I wonder
in
if I
one
should get
day
another
off the back
energized
of
item to go with
UBS
it, like
playing
a rapid
catch-ups
fire
with a
instead of
price
like a-
target. Now Susquehanna going to what, like
I mean, I doubt this game's
1,700
even gonna
on their price target as well. I mean, what does this tell you about where the market was at? Are we missing something, or is this just like pure AI hype and tech mania?
So, Sam, always a pleasure to be on with you guys.
I've essentially already won the game.
We've been talking about AI, and it feels like we've been talking about it a lot over the last couple of years. We are still so early. I'm starting to get better
With the
at
Cyclo
US
Sword
sporting
first.
analogies.
This activates way more than I thought it would.
Pre-game of a 7-game final series. This is the first innings of a 7-game approach. We are still so early. What we're now getting to the point, and we've been talking about it over here at Hyperframe,
this is what's going to happen.
This AI execution gap, and we're starting to see this. We talked about.
We're going to get another one. I'm going to do a game too. I'll build Cyclo Sword first.
NetApp in the segment while I was watching, waiting to come on the show. These are now the infrastructure companies that are starting to back into the demand. This is the picks and shovels companies for this AI gold rush. We've seen those companies get well positioned. We've seen them forge the partnerships with the NVIDIAs, the Intels, the AMDs, the Microns, all of these guys to be able to establish their offerings and get these these AI factories into customers, and that's now what's starting to drive the demand. We are still so early. I don't see this as a hype bubble. We're building this infrastructure and actually deploying it. I've spoken to Lenovo today. I was out with Michael Dell and the leadership team from Dell last week at an event they ran. All of the signals that I'm getting from chatting to my analyst peers and to these senior leaders, we're now starting to see the demand show up, and that's starting to manifest in the
early innings of a 7-game series right now, Stephen. Does that also apply to Dell? Because when we were covering this yesterday, it was record this, record that, record. We had record revenue. We had AI demand at 750+% in terms of their AI optimized revenue. Is it early innings for Dell specifically as well, or are we closer to peak spending for this name?
We're still early. I don't see this slowing down for at least the next 24, 36 months. The build out, Dell is selling every server that it can get its hands on. They're the masters of supply chain. They're operating at a scale that's bigger than some of their competition. That enables them to get to the front of the line with NVIDIA and Intel and AMD and Micron and Samsung and SK Hynix when it comes to high bandwidth memory for these AI servers. So they're operating at a scale, but I don't think I'd be looking at these blowout numbers, 43.8 billion in the quarter, record revenue, 16.1 billion in AI server revenue. I think those are going to be what we expect from these guys going forward. So we've set not only a new bar, an all-time highs, but I think it's only up from here. I still think we're in the early adoption phase. I think we've got a long way for this market to run. As I say, I don't talk about equities prices and what people should be doing from that perspective. From some of the fundamentals and the underpinnings of the technology and the adoption, we've got a long way to run.
You also mentioned Lenovo there, Stephen, because, we are guilty of pumping these together, and I think that is important because, Lenovo did smash it out of the park, and we saw that from HPQ as well, that those are some good earnings. And what is that telling us? Certainly about the PC business. Certainly it's telling us that the memory inflation is something that they're managing to navigate right now because they're dealing with their suppliers, they're raising prices, and they've got the pricing power in order to do that. So are we still worried about memory?
I think the memory cycle sounds going to run for at least the next 24 months. If this was a Dell-only story, that would be a great execution story for Dell. We're seeing the same from Cisco. They all-time highs, blowout quarter. I was on with their leadership team yesterday talking us through the numbers. Blowout quarter for those guys. You look at Lenovo. I got briefed on their earnings and what they were doing again this past week. Those guys are blowing it out. HP, so you've got Cisco, you've got Lenovo, you've got Dell, you've got HP, you've got HPE. All these guys are blowing it out of the water. So I think if you're looking for a particular signal, it's in the signal of the aggregate. Yes, there's going to be differences in execution capacity and the ability for these companies to operate, but it's across the entire sector.
And as it's across the entire sector, Stephen, and you mentioned there that as long as Dell has the ability to secure and deliver the hardware, they're going to. Is there concern about that? How much of their success is coming from demand versus simply being able to secure and deliver the actual product?
So I in a closed-door session last week with Michael, I asked him why Dell for AI, and his response was very eloquent about the solution and what they've been able to do and how they've been able to package that. But there was a flippant comment in there that kind of resonated for me. It helps when you force up times the size of your competition. And there's a supply chain excellence within Dell, and then you couple it with the size and scale that they're operating at. If you're an NVIDIA, you're an AMD, you're a Micron, you're an SK Hynix, any of these component manufacturers, you're going to be talking to your Dell counterparts just given the scale they operate at. We're also seeing that with the likes of Lenovo and HPE. Less so with Supermicro, they've got their own challenges, but I think some of those three big names, we're seeing that all of them have got strong supply chain and strong ability to execute. Maybe there's an extra turn in the crank there for Dell, and that's what's showing in some of their numbers. But I think all of these guys, we're talking about established businesses that have been in this game for a long time, that have got a proven roadmap and an execution capability, and then you just landed on their laps a huge tailwind.
Yeah, and it's wonderful getting some of that colour from those conversations that you're having, Stephen. I mean, particularly because as one analyst told me yesterday, I mean, he basically said AI won't sell from its slumber a year ago. So obviously it's got that endorsement now from the government with this Pentagon deal. Obviously no real update on that because no huge amount of details that they can reveal because it is the Department of Defense contract. But what is that telling you about a template now for working with other enterprises and other government departments even moving forward for a name like Dell?
So you look at, we've heard Jensen and all of the other big players talking about AI factories. We're now at the point where these guys have got reference architectures. They know how to deploy these. They know how to put all the bits together to deliver this at scale for the enterprise. So I think what we're past the early days of this where people really didn't know how all the pieces and parts fitted together. You look at what I was hearing from Dell when I was with them all last week. They've got proven deployment methodologies. They've architected their solutions through the storage, through the data platforms, through into how they automate the deployment of these. All of that now, that turning of the crank to get it to a point where they can deliver, that is vital. That means that now these enterprises and the government can call up Dell and go, hey, we've got an AI project. We think we've got a use case. Can you deliver the infrastructure? If you'd have been sort of 12, 18 months ago, it would have been a bespoke kind of integration job. Now there's proven templates. So that means they can get this stuff in and on the floor of the data center quickly and improve that time to realize value. And I think that's going to be the story throughout the
Appreciate you taking the time to be with us today and also for shedding some light on some of those private conversations you had that are very important to taking a closer look at these numbers and what they might mean going forward. Have a great weekend. Stephen Dickens, CEO and Principal Analyst over at Hyperframe Research. Coming up next, we're going to be joined by the team from AstraZeneca to discuss its role in the cancer research market as the company kicks off the world's largest cancer conference today. Market on Close. We'll be right back.
Killing spree.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done that. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Joining us now in studio to discuss the cancer research market is Dave Fredrickson, Executive Vice President, Oncology Business at AstraZeneca. Dave, great to have you with us. Now, I know you're here in Chicago for what we were just discussing off air is the Super Bowl of cancer research conferences, but AstraZeneca has led the industry in U.S. cancer drug approvals over the last 2 years. What do you think the biggest driver is behind that success?
Marley, it's great to be here. Thanks for having me. And it's wonderful to be here in studio here in Chicago. We've got ASCO right underway, just started today. And it really is the premier conference for launching the latest, newest data that is changing the field of cancer. At AstraZeneca, one of our core focus areas is on oncology and hematology. It's the unit that I run, and we set out an ambition to really redefine the next era in cancer treatments. And we want to do that by having the most innovative discovery, development, and delivery. And in terms of what we've really focused in on is that we believe that there are several key mega trends that are transforming the way that we can treat cancer. One of them is to move into early lines of treatment as early as possible. We know that when patients have their cancer treated early, outcomes are best. We also know that when we can bring cancer combinations together, so using multiple agents together, that we can get ahead of the cancer and drive to the best outcomes. And we've got a great ASCO to showcase a lot of the new innovations that we're bringing in that regard.
All right, I want to talk about your unit. Oncology accounting for about 44% right now of AstraZeneca's revenue. You've had 3 approvals just in this last month alone. As you mentioned, some of these new trends that you're seeing and some of the new ways that we are going to fight cancer effectively here in the U.S., how much of that is coming from finding new indications for existing drugs versus creating entirely new medicines?
Yeah, super question. So last year, the unit had $25+ billion in sales. We were able to do that with 6 multi-blockbuster oncology medicines, and many of those growing in double digits and indeed high double digits. And the way that we're able to do that is by investing in making sure that we go every single area of unmet need where we believe that these medicines can really make a difference. Here at this year's ASCO, one of the things that we're most proud of is the advancements that we're making with our immuno-oncology agents, Imfinzi and Imjudo. These are 2 agents that are designed to harness the immune system so that the immune system can combat cancer. We've got 2 really exciting data sets that are going to be presented, one in early bladder cancer, another in early liver cancer. In fact, we just received FDA approval earlier this week for a study called Potomac, which is really looking at very specifically in the bladder cancer space. And it's this strategy of going early that's transforming cancer care. That's allowing us to bring new indications into the marketplace, address high areas of unmet need, and create shareholder value in the process.
And in doing that, I mean, historically, oncology has focused on treating people who often have advanced disease. I mean, they don't find out they have cancer until you're hearing stages that are 3 and 4 and are lethal. And as technology is advancing and AI is contributing here as well, and companies like AstraZeneca focusing on trying to get in earlier, do you view that as where the biggest opportunity lies in terms of growth over the next decade?
Yeah, absolutely. So if the goal is to eliminate cancer as a cause of death, which is our ambition, and cancer is many diseases, so we are going to have an evergreen ambition in terms of making our way towards that curative state. But going early is absolutely necessary in order to do that. We know that when cancer has spread, the ability to be able to really keep it at bay and to drive to cure goes down considerably. However, when we catch it early, we're able to really address the cancer, address mechanisms of resistance, and stay ahead of it. Another really important study that we're presenting data on is in a breast cancer study called Serena-6 with a medicine called camizestrant. This is a study that's taking a look at a really novel question, which is saying rather than wait until progression of cancer, which means that the therapy has stopped working for a patient, let's use a blood test and see if we can detect mechanisms of resistance in the blood that give a cue to early interception of that cancer. And we're making remarkable progress in terms of how we're leveraging new technology together with the most advanced understanding of biology, together with data, and it's that convergence that I think is going to get us towards more and more cures.
So as you have these tests and you can do more targeted style therapies, it brings me to one of the other shifts that you highlighted in the notes. You said that you're moving more into these targeted therapies. We're specifically targeting the exact cancer instead of sort of the more broadly thought of cancer goes with chemo. And chemo is just sort of a full body attack. That is sort of becoming more a way of the past, and there are better ways now to treat certain cancers.
Yeah, so unfortunately, despite all the progress that we've made with cancer, and we have made so much as a field, we still rely on classic chemotherapy for so many treatments, particularly in advanced settings that you've talked about. And we need to eliminate classic chemotherapy everywhere there. Antibody drug conjugates, which is a more precise way of delivering a direct kill to a cancer tumor, is one of the things that we're really pioneers in and that we're advancing in. Think of it as a precise key that unlocks only when there's a specific tumor signature that suggests that that's where we're going to need to go and deliver this particular medicine. And so the hope of this is, and what we're showing is happening, is that the efficacy for patients, the activity is higher, and the side effect profile is different than what you get out of classic chemotherapy.
And Dave, I'm gonna fast forward us 5 years. We're 5 years out. It's 2031. You're back in Chicago for ASCO, sitting here with me. What is one thing about cancer treatment that you believe will look dramatically different from today?
One of the things we haven't had a chance to talk about, but is so exciting, is the advancements of cell therapy. Cell therapy today is really demonstrating the ability to drive towards cures in many types of blood cancers. So the advancements that we're seeing in multiple myeloma have been very, very impressive. This is a field that we're heavily invested in as a company. But the opportunity in 5 years from now is that we can go beyond hematology into solid tumors. And so we have exciting data that we're presenting that's early stage in liver cancer. We have promise in prostate cancer. Cell therapy offers the promise of being able to deliver something early. And we like to see kind of a one and done treatment. So one opportunity to make sure that we're able to deliver this cell therapy that on its own harnesses the immune system and ideally keeps patients off of therapy and drives towards cure. And as we open up that science to more and more patients living with cancer, I think that we're going to make remarkable progress against more effective agents.
Well, Dave, we really appreciate you stepping away from the conference to join us in studio and share more about what AstraZeneca is doing to fight cancer. I don't think there's an American family right now that hasn't been directly or indirectly affected by it. So thank you for all that you are doing and all the research. And we look forward to following your presentations over the weekend as well. That's Dave Fredrickson, Executive Vice President of the Oncology Business over at AstraZeneca. Coming up next, we've got Options Corner. Rick Ducat will be joining us right here in our Chicago studio to break down the activity on HP Enterprise as shares are rallying following Dell's earnings and ahead of its own report on Monday. That's next on Market on Close.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Bob. Hey. Last year, my dad got a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up? My dad has been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the market. Watch live on Schwab Network at schwabnetwork.com.
Your team has destroyed a turret. Your team has destroyed a turret.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Welcome back to Market on Close. HP Enterprise rallying to a new all-time high today after earnings from Dell and NetApp showed strong demand for AI infrastructure. HPE set to report its earnings after the close on Monday. Analysts expecting adjusted earnings per share of 54 cents on revenue of nearly $10 billion. Shares of HP Enterprise are up more than 140% year over year. Now, of course, it's time for Options Corner. We've got Rick Ducat, our lead market technician, joining us to take a closer look at HPE in advance of that earnings report coming to us on Monday. And I can see that if it's the purple one that we're significantly outperforming.
It is indeed the purple one, up 143% almost versus the XLK Tech Sector ETF up 65% here, our teal line. Both vastly outperforming the S&P as well. And if Dell's earnings were anything that's going to be a barometer for HPE, it could be a pretty nice day for anyone who's bullish in this name. It's kind of similar companies both involved in this infrastructure and networking equipment space that is so important to this AI industry that we are seeing develop here. So it's unquenchable demand for anything related to making these supercomputer clusters here. So, I mean, Dell is just an extraordinary move to the upside today.
I mean, Dell's move to the upside is incredible, but HPE in its own right moving up more than 12% today in its own sympathy move. So as we look at the technicals on this one, I mean, clearly a nice upward sloping channel here, but what's the setup as we go into earnings since we've sort of rocketed our way out of the channel?
Yeah, it can be kind of tricky to assess a chart like this when you have such an extreme move to the upside and there's not really a ton of prior price activity to go off of here. For a while, we were traveling in an upward sloping channel type shape here, but we were having an upside breakout even before we got to this more sharp move today that we saw. So 38.58, the old intraday highs, now becomes a potential level to watch. If we were to retreat around that level, we could start to see that gap fill. Interestingly, we are a good bit off of the highs that we saw today, but also we're quite far off the lows, almost forming what's called a spinning top type candle, where we have a very small real body, which is the distance from the open to the close, trailed by a long upper and lower wicks here to give us kind of a shape like a top that you see spinning. So it will be interesting if we do develop that pattern here, which would make sense given that we're about to have our earnings come next week here, which is a rather uncertain event regardless. So when we look at our moving averages that we follow, 5-day EMA in dark blue coming in a little bit below the 39 level. So roughly in line with those old intraday highs. So that would give us another convenient supportive area to consider. RSI is what you would want to see if you're bullish in this name, though. We are overbought. We are above the 80 level, which is more of an extreme reading. 70 is overbought. 80 is pretty extreme strength to the upside here. And we are still making new relative highs along with price activity here. So not a typical setup that you see heading into earnings. Oftentimes these slow down, but given that monster move from Dow that we saw today, it seems like there's not really any stopping this one here as we head into the weekend. When we do look at our volume profile today, actually pretty darn heavy trading for just this one day. We're focusing on the past 3 months here today to give us a more granular look at this very sharp rally. Kind of amazing how often I've had to say that recently here, given all these high-flying AI adjacent names. But another node here coming in around the 37, 38 level. Another one here, a very bigger one near 33 to 34. And you can see really, too, a very heavy volume spike that we saw today on this big move to the upside.
Well, I mean, we saw the volume spike, and so I'm assuming we saw a significant uptick in terms of the options action on this name after we got those results from Dell. Just how outsized was it?
Yeah, very great outsized activity here. 6.82, so almost 7 times the 5-day moving average of options volume here. Pretty darn big for a major name in the S&P 500. So when we can also look at more of our options activity in greater detail, that translates to about 189,000 options contracts being traded today. 87% almost were calls, so very heavily skewed toward calls. Typically calls outpace puts, but not to this degree. So a very heavy weight toward that side of the market. We can see that when we start to look at our open interest numbers, the June 18th expiration, our monthly expiration that's coming up next, is the heaviest open interest month, almost 24% of all open interest. We can see that that orange box right here is that June expiration expected move, representing plus or minus about 18.9%. One of the bigger trades I saw today, plus 983 August 21st, 45 strike calls at a 570 debit, representing about a $560,000 debit paid. Not really clear if it was an opening or closing trade, but there was no obvious visible corresponding trade that would match up with it that would make it appear to be a closing trade.
Yeah, and right now they're at 43.09. We're trading up about 12% higher. With that 12% move, that put HPE up more than 50% just for the month of May. Thanks to Rick Ducat for breaking all of that down for us. Rick, have a great weekend. I do want to send it back to Sam, though, to find out who she and George will be talking about for overlooked stocks.
Marley, we're going to be talking about Next Power heading into the close. So George Sillis is going to join us to break down the news about that particular one and what we're seeing in the charts coming up next on Market on Close.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headline, tracking the trends, sector moves, and fundamentals shaping the market in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets in the Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
First day, so sometimes, you know, try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
HR, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick? We have to buy that now. Schwab.
Invest with Schwab.
Welcome back to Market on Close. I'm Sam Bartis, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. Solar energy company Next Power rallying to a new all-time high today after raising its full-year guidance and announcing a major acquisition in the power infrastructure space. So we're joined by George Sillis this afternoon, senior markets correspondent. Just walk us through the details here, George.
What you started.
Well, I think this is interesting. I mean, when we talk about data centers and build out, you know, everyone's talking about the constraints, which is electricity, and solar actually has done quite well. Not necessarily the residential solar companies, but there has been quite a bit of movement in companies like Next Power, which used to be called Next Tracker, other companies in this space too, like for instance First Solar is a competitor in Array Technologies. These are companies that provide things like technology and software and monitoring control systems for solar. And it's not residential grade or which is now in high demand considering the build out for artificial intelligence, the need for large-scale panel multi-year projects, which again, NextPower is generating a lot of revenue from. And so what they're doing now is they're trying to vertically integrate their technology, including battery storage, because battery energy storage solutions businesses like Prevalon Energy, which they made an acquisition offer of $365 million for, expands the verticals in the power production space for solar, not necessarily just the software, as well as, of course, technology and monitoring control of their software systems, but now storage. Other bigger players out there, which is now Tesla, they focus a little bit more on the residential side, but they all too have been moving pretty aggressively into utility grade solutions for major commercial operations like data centers and such. And so essentially with this said, the analysts like this move by NextPower moving into the battery energy storage space because the market share outside of China is estimated to grow by the end of this decade around $35 billion. And so they increased their earnings guidance to about $4.2 billion for the fiscal year, which was before slightly above $4.02 billion. And also at the same time, their EBITDA in dollars and cents was expected to be $900 million prior to this acquisition, but they're adding another $30 million on the high end because of it.
And you can sort of understand why solar companies are doing this as sort of a trend. I mean, pairing their solar business with batteries so that when they're collecting, obviously, all that energy from the sun during the day, they're using that at night to put in the battery storage, which they can deploy at peak demand times when the sun isn't shining, and they can actually charge a higher price. And so maybe that obviously is going to feed into earnings, which is, you know, why investors like it too. I do see that this is one of the biggest holdings in TAN, that's solar ETF as well, which did actually hit another high today too, no doubt on some of the strength here. But I mean, it's up like 132% over the last year. I mean, is there anything interesting that you notice about what we're seeing? Obviously, this is an AI type of trade because it's become that sort of adjacent kind of trade because of the power needs. But anything else sort of stand out to you about what we're seeing in renewable energies?
Yeah, so it's a good question. I've noticed in this last week too, First Solar, which is again a very complementary competitor to a NextPower, I believe that stock is hitting a new 3-year high. So my point is that look, we are seeing a lot of fiscal stimulus, whether it's deals for semiconductors or quantum computing, the Department of Commerce. There seems to be money still pouring into utility-grade solar projects. And again, this is big for the industry group. I don't know exactly what's going on in the residential space, but I do suggest the residential solar market is relatively weak considering new home sales and even existing home sales are not turning over because of higher interest rates. So with that said, again, you have to be careful in the solar space or renewable energy space to focus more on where the demand is, because non-residential fixed investment spending was the key ingredient to the GDP revision numbers, which were published yesterday. So the other thing I will point out for this name is now, even though the EBITDA did expand slightly from $900 million to $930 million based on this acquisition, some of the analysts also, like BNP, increased their price target to $182. I did cover this company in the past, and it had traded around 14 times next year's earnings. Now it's trading based on the adjustments around 28 times. So even though the price is moving higher, the earnings haven't caught up just yet on this day, but that's not to say that it can't continue from here as the stock is continuing highs. And last, I'll point out this as well, some choppy trading in this name because the volume isn't very robust considering some of the volume in the other names out there, and that's why you see a lot of choppy price action in the chart.
Okay, understood. And the majority of analysts who cover this stock are in a buying camp as well, for with a strong buy rating. George, really appreciate it. Thanks so much for all the details on this. Have a great weekend. George Phillips there. Marley, I'll send things back over to you in Chicago.
Thanks to Sam and George for that one. We are nearing the end of the market session. That means Kevin Green will be joining us to break down the levels he's watching on the S&P 500, as well as this week and this month's action. That's all next on Market on Close.
Man.
Order filled. Order filled.
Sometimes,
Order filled. Order
you could have
filled.
done better.
Order filled. Order filled. Order filled.
Same goes for
Order
where you
filled.
invest.
Order filled. Order
Level
filled.
up and invest
Order
smarter
filled.
with Schwab.
Order filled.
Kick off the morning
Order
with the
rejected.
data
Order
and
rejected.
the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risks. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Here on Market on Close, I'm Sam Vardis on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. So we've just got a few minutes left in today's session. We're going to wrap up this shortened trading week with Kevin Green, Senior Markets Correspondent. And KG, obviously we saw these intraday highs for the Dow, the NASDAQ and the S&P 500. What levels are you watching into the close today?
Well, we are fading that 7,600 level for the S&P 500, and that's really where we have been kind of gyrating around that 7,600 level to the upside. And then for the lower today, we saw it around 75. 60, 75, 65 or so. So the intermediate level that we highlighted this morning, and then the other, positive gamma level that we saw, we've been pretty much trading in this range. But, this is month end, and I think this is actually very interesting to see what's happening for the last 5 minutes or so going into the close. If we can bring up a Microsoft chart, we are seeing Microsoft up about 1.5, almost 2% over the last 5 minutes or so because of the MSCI rebalancing here. And so this is that month end activity that we usually do see going into the close. It took a little bit of time, but now we are actually seeing it pretty much in real time right now. NVIDIA is also another reason why we are seeing kind of this pullback for now. We do see NVIDIA dropping from $217 down to $212. There was a significant sell order on the market on close over here. That's probably a part of the rebalancing for the indexes for, once again, MSCI. You are also seeing some other culprits getting hit right now. Google, Alphabet being another one, and then also Micron moving to the upside, going from $940 up to $970 in a matter of minutes. So this is the kind of action that we see on the individual stock basis that can have an impact on the overall broader market. But to see that much flow going into NVIDIA or selling out of NVIDIA into the close is one that we only see every once in a while, especially in a year and a month like this one.
KG, you and Sam probably saw me looking just slightly off screen. I was trying to log in to see if anything had come across the wire as I watched NVIDIA just plunge down. But I mean, if all you're seeing is that order there, I'm not seeing any headlines that would be doing it. We did see Intel also fall to a session low as well here. But Sam brought up a great point earlier in the trading day that this sell in May and go away, I mean, it couldn't have been any farther from what we saw for this month of trading action. As we look at the month on the whole, what stands out to you most?
Well, I think the trading action itself, we made higher highs, higher lows. Obviously, there was this concern around the Iran conflict, and rightfully so. We still probably have that concern in the back of our minds. But if you kind of look at the past, let's say 5 years or even 6 years, anytime that we have a worry in the market, it seems like we initially see a volatility spike, which is what we saw in April, and then you see buyers really trying to step in here on that fear. And it usually, and has been, the profitable trade over the last couple of years. And it seems like that's exactly what's happening right now in this market. I think you're also getting a couple of different themes that are now taking place here. Dell earnings, obviously we saw that massive reaction to the upside. Snowflake, some of these names that have been, well, not so much, but some of these names that have been kind of lagging when it comes to the AI narrative are now seeing a little bit of a revitalization, if you will, because demand is actually relatively strong when it comes to the fundamentals, and investors and traders are looking for those trend trades. And so that's actually probably going to command the space in June. And I would not be surprised if you do see software starting to catch a little bit more of a bid, as that has once again been kind of that lagging trade for this month.
The IGV right now up at 6.2%. Some big moves, as we say. Microsoft, Nvidia, and Micron going into the close today. That month end rebalancing. Here's your bell. Today, obviously, as we mentioned, for the S&P 500, the Nasdaq, the Dow Jones are all sitting up as we cross the finish line there. Some nice gains for the Nasdaq. They're up 0.4%. There's a lot of activity happening in that final hour of trade around technology, and really that was the winner on the day as far as the sectors were concerned, doing the heavy lifting with a gain of 2% for the IT sector. The S&P 500 rounding out the session, 75.80. They're up 0.2%. The Dow Jones putting on that 360 odd points there, up 0.7%, and it was the Russell 2000 which was the lagger on the day. So a bit mixed, but three major averages there, rounding out the week with some gains. And of course the S&P 500, its ninth week of a rally here that we've seen, so that would take us to the best since 2023, and a lot of that has been on the tech strength, really supported by earnings. So let's just take a look at some of the sectors, because it was 9 out of 11 in fact that were underwater, all but financials and technology. So that, as we said, was the winner on the day, up 2.2% there, but the rest were underwater, as I mentioned, down in the negative territory. Communication services down 0.8, discretionary down 1%, staples down almost 2% there. Flipping the board and taking a look at some of the other sectors that got dragged down here today. Utilities, real estate was down 0.9, industrials and materials losing about a similar amount here, down 0.4%. And taking a look at healthcare as well, that was down almost 1%. But as I said, financials was another little bright spot on the day. In fact, up about 0.6% right now, and energy tumbling on the day as well, off the back of oil prices continuing to take a leg lower. We were down about 2% or something in the session earlier today. We are at $88 a barrel right now on WTI crude. So that is, of course, how we finished the week and the month here. A shortened trading week, but no doubt no shortage of activity, particularly on the earnings front, with some of these huge moves, as we were talking to Stephen Dickens about, with the likes of Snowflake and Micron, with some of these price target adjustments as well. But a very nice week, as we mentioned, for softwares, with that IGV rounding out the day up 6.3% just late in the session. In fact, if you take a look at some of these names, there were some very big sort of double-digit gains here. Workday up 12.5%, ServiceNow at 14.5%. Across the cybersecurity landscape, you also had a number of those tech names higher as well. Oracle with a 10.8% gain here too. This was mega cap tech, as we mentioned. Microsoft with that surge just in the final minutes there, as we did see that degree of rotation or buys up 5.5%, and the rest were down. Nvidia, of course, losing altitude as we saw in those final minutes, ending the day at 211 and change. Apple not managing to hold on to those gains, but I do believe it's gone for its 10th weekly gain here. That would be the first since 2009. So it's actually had a pretty good run of late. Amazon obviously lower because its satellites were on board that rocket, which exploded. So maybe hitting a bit of a snag there, maybe a bit of a setback for what it's managing to do to get that stuff up into orbit. And Alphabet was lower on the day, down 2.5%. So not a great end to the session here for our Mag 7 cohort, all but Microsoft, as we can see. And I'm just seeing Tesla was also down about 1.5% as well. All right, let's bring Marley and KG back into the conversation. KG, I mean, just talk us through that type of activity that we saw in those final minutes, what it exactly means, what it is telling you about where some of these traders, where some of these portfolio managers are wanting to be right now, as far as not wanting to be on the wrong side of any trade.
Yeah, so when we have a month in or even a quarter in, we do have rebalancing for passive index funds, and some of these indexes themselves have to rebalance because they might be a little bit overweight in certain stocks and they might be underweight in others, and that's exactly what probably happened going into the close. That market on close sell side order on NVIDIA was probably rebalanced into names like a Microsoft or even a Meta for that matter, which is why we did see that significant bid higher. And I think that's the kind of trading action that we get and why the month ends are so fun. Now, also, if you're kind of looking at some of the trading action today, Oracle is another one that kind of stood out for me. It's up about 10.8%. And this is another stock that has been kind of lagging here, but if you kind of look at this consolidation, it is trying to break out. Microsoft is trying to break out. Meta's the only one that really has not broken out of its neckline right now, but I'm sure that there's going to be a lot of traders and investors looking at charts over the weekend, trying to set themselves up for June, and you're looking at maybe a chart that, a stock that might be trading at all-time highs and aggressively move higher, 20-30% over the last couple of weeks, or a stock that's been kind of basing and consolidating and going into June. Sometimes you look at that type of valuation and you make those decisions here. I think that's exactly the action that we saw here today. And then on top of that, the performance that we had for this month alone, technically speaking, is still relatively bullish. If you look at the E-mini S&P 500, the 20-year monthly chart, which is what I like to look at, we continue to make higher highs, higher lows. We saw that pullback back in March, when we had the pullback down to the 20-week moving average here for the monthly, saw a little bit of consolidation and started breaking out higher. We have been in this positive bull trend channel to the upside, making higher highs and making higher lows. We can bring that chart up here, but you're not even looking at maybe that next area of major resistance for the E-mini S&P 500 until you get to around that 8,100 level for the E-mini S&P 500 futures. So it does seem like there's still clear skies up here. We're making higher highs on the RSI. MACD, it did look like we wanted to have a little bit of a bearish cross about a month ago, 2 months ago, but we were able to avert that. So this is actually looking like a technically sound market.
Kevin, I love to whenever we have a Friday, it feels like earnings should be over, but earnings are not, in fact, over. We've got more names reporting next week. We've got HPE, Dollar General, Palo Alto Networks, Broadcom, I think Lululemon's in there, CrowdStrike. I always like to know who you're looking out for because it always, the last several times I've asked, has ended up being a big mover. So who's on your radar?
I would say, obviously we're going to be looking at CrowdStrike. We're going to be looking at Palo Alto Networks. I think what's going to be very interesting is on Tuesday morning, we have Dollar General. So we have Dollar Tree. They had their earnings. They actually look relatively good. Dollar General is going to be a little bit more consumer discretionary compared to consumer staple, which is a little bit more of a focus for Dollar Tree. But that stock has been kind of lagging. You start to see maybe some buyers trying to step in here, but they could actually have a very massive reaction to the upside here if they're able to talk about the management of their inventory, and if they actually got ahead of some of the disruptions within the Middle East, that could actually be a net benefit for them. And once again, the rotation out of maybe a Walmart or a Costco going into a Dollar Tree or a Dollar General, it seems like that was the trend that we saw the last 2 or 3 trading sessions. That could actually be some Dollar Tree for next week as well. Outside of that, we have Broadcom. I think that could be a major one. Obviously, the options market makers are going to be really focusing on that. But outside of that, those are the ones that are kind of is on my radar here. It's kind of the end of some of the interesting ones when it comes to the industrial space as well as the material space, and so we're kind of left with some of the stragglers when it comes to tech, and everybody's always focusing on tech, so I'm not going to bore anybody with the names that we're going to talk about ad nauseum next week. Credo as well. Credo is going to be on Monday. That one can be a really big mover. A lot of traders do like to get onto that name here, and it seems like their earnings have actually been relatively good over the last couple of quarters.
So, KG, President Trump has said he's going to make some sort of final determination at some point. Now he's listed out his demands for us to obviously see some sort of deal to end the war here. I'm just wondering what you're watching as far as the chance of oil going into the weekend and next week.
I mean, oil definitely got broken down this week here. You're looking at around the $82 level for WTI to really hold as a firm area of support. And that's where buyers have stepped in before, but you are starting to get a lot of traders kind of backing out of this trade. We were overextended when it came to the institutional positioning. We had net long positions that were pretty much similar to what we saw in the Russia-Ukraine conflict. So you are seeing some of that being backed out here. I think the market is very optimistic, probably a little bit too optimistic, given the fact that a lot of the rhetoric from President Trump as well as from the Iranians has actually not changed over the last 3 weeks, 4 weeks. We continue to say the same thing, but somehow we're going to have a deal that does come to fruition. And we'll keep our eye out on the geopolitical risk just in general. I mean, the kinetic action that is taking place around the Strait of Hormuz as well as the Bab al-Mandab Strait is actually escalating a little bit more than what you would like. So I think the oil risk is still out there here in the near term. And if we get a deal, we'll see if we have some follow through. I think strategically right now, the administration is looking to try to move oil prices to the downside, give themselves a little bit of wiggle room.
The market
60
is
days is not an anomaly when you're looking at the extension of the ceasefire. After 60 days is the back half of the summer driving season, and when we start to prepare for fall and then the retooling for winter blends. It's easier to have a conflict in the winter than it is in the summer for the United States. It also puts a little bit of relief when it comes to the SPR draws, which at 9 million barrels per week, that's not going to be sustainable for a fairly long time here. So that's what I'm keeping my eye out on. The market's very smart. Let's see how it actually turns out on Monday.
Yeah, and typically in light of Exxon and Chevron's comments as well, particularly around their warnings with respect to inventories and oil shortages today, with the expectation that we could see another oil spike over the next couple of weeks and months as far as those prices, but we'll have to wait and see. It looks like the market shrugged that off today, but KG, go start your weekend. Thanks so much for helping us out today and all week. All right, coming up, we will discuss the Iran war and the impact on the market and the potential for a lasting peace. That's coming up next on Market on Pose.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near term.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, same goes for where you invest.
Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Lattis on the floor of the New York Stock Exchange. Joining me now to discuss the Iran war and its impact on the market is Arathi Krishnan, who is the CEO of Raksha Intelligence Futures. Arathi, thank you so much for joining me.
Thank you for having me, Sam.
So obviously we are waiting for President Trump to make the final determination. He said he will do that after listing out his demands for what could potentially make a deal. What is the key thing that you guys are looking out for right now?
So there's a few things that we are watching at the moment. So A, will the strikes keep continuing tomorrow morning in Bandar Abbas? Because that indicates whether Iran is moving closer to an agreement or not. Because if those strikes still keep occurring, it means they're nowhere close to an agreement. The second is whether Pakistan also announces any kind of understanding of an agreement. At this point, what we know is that Iran hasn't officially notified Pakistan. Thirdly, and I think this is the biggest gap, is whether any information about what Iran's inputs into that deal are released. Because currently there's a gap. We're hearing one side of the story, which is the Washington side. But what exactly Iran wants to get out of it is silent. And in fact, even in the news today, they've completely contradicted President Trump's assertion that a deal was close or that they were willing to give up control over the Strait of Hormuz, or whether any discussion about enrichment or nuclear programs was even in the deal.
Right, and so I want to get to that exact point because as we are hearing the Washington side, it does feel like the U.S. administration is stuck between a rock and a hard place where they do want Iran to remove that enriched uranium, which they are obviously pushing back on, and at the same time dealing with the global economic fallout from the impact that this war is happening. So which breaks first, or at least I should rephrase that, who is more willing, or do you think where we would see the concessions for some sort of give and take?
Sure, we will not see a concession from the Iranian side on anything to do with enrichment or nuclear programs. And that's the reason why I say this, and it's actually a historical reason. Iran is a signatory to the NPT, the Nuclear Proliferation Treaty, which essentially means it does have an inalienable right to have civilian nuclear technology, including enrichment programs. So they see it as a point of sovereignty. So what it's perceived to be is that the U.S. administration is asking another country to give up assets of sovereignty and assets of its right, which they won't agree to. They have previously, under the JCPOA, agreed to the levels of enrichment that they have, the levels of stockpiles that they have, but to not give it up completely. The thing that they may move on is issues around the opening of the strait, because of course everybody wants that shipping to move through. They may move on clearing elements of mining. They will not move, and even this was in the news today, control the strait. They've said alongside Oman that is between those two countries as the two states that are on the opposite sides of that strait that have the authority to control it, and the U.S. is not party to that.
So if there's not going to be concessions, particularly on the Iranian side, as you say, this is a sovereign pride here. If we do get a deal, what does that look like? I mean, what are the contours of that agreement? And then what subsequently happens next? What do we have to see that's so important that ensures that this doesn't escalate further? And we know that it's not some sort of head fake.
Sure. So the first thing, the deal, from what we know from the American side, says it's a 60-day MOU, says the strait will be opened ultimately, free movement, that Iran has to agree to clearing mines within 30 days, that it will also lift up the naval blockade, that discussions around lifting of sanctions will be phased, and Iran has to commit to giving up its nuclear program. That in itself is already on shaky ground. Right. There's elements of that Iran is not going to agree to. Now, let's say in an amazing world, they do by those terms. But even then, it does not mean, and I have high doubt that it will not do it within those 60 days. For two reasons. You cannot physically clear mines within 30 days. Post the Iraq war is just complex process and completely for this spectrum. Secondly, just because you make the strait opening, it does not mean that ships will immediately start moving. It has to what has to happen is that wall shipping insurance has to recalibrate and reprice down. And most insurance companies look for a period of stability before they reprice. And ships that maybe want to wear that risk will move. There's, I think, 1,500 ships already backlogged around the strait. So that, again, is potentially another 3 to 6 months before ships will likely move, where shipping insurance comes down that allows ships to move. And that now, overall, you're looking at a 6-month to 12-month program here, not a 60-day journey.
As it relates to the markets, if we get a deal, whatever shape that takes, what happens?
Sure.
Do you think you see a sell the news type of event, or do we start to see that rotation?
So this is really interesting because, again, for the two sides of the story, if we see an announcement, not a deal, an announcement, that the first announcement will likely come from the U.S. administration. Within 24 hours, I would be watching for whether a similar announcement is coming from the Iranian side. And if a similar announcement comes out, does it match completely what the deal says from the U.S. side, or does it differ? And those conditions do matter. Now, if, let's say, again, hypothetically, it matches, what we'll see is equities are trading at a high right now. And we know that because equity prices on hope, they're pricing on the probability of a deal happening. Oil, to me, this is what we want, prices on reality. And based on the conditions that I mentioned earlier, even whether you're long or short on oil at the moment, an announcement might see a few dollars, a single-digit movements on it. But the deal actually breaking is the bigger one, because that will see a 30 to 50% increase in oil prices, which McKinsey and Macquarie have already priced it at that.
Yeah, and as you say, it's just so nuanced at the moment, particularly with what is going on with Baba Maldab, as we have been reporting out as well. So that is something to watch over the weekend too. But we've completely run out of time. Thank you so much for joining us. That was such useful, helpful insight. Arathi Krishnan there, CEO of Raksha Intelligence Futures. And coming up next, we'll close out the show with our final takeaways on the week, what we're watching for next week as well. Market on Close will be right back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas, the structure, risk management, and focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Market on Close. I'm Marley Caden here in Chicago alongside Sam Bottis at the New York Stock Exchange. We will close out this month and this week with our thoughts on the session. Mine's more of a monthly look, though. Oil prices are now down roughly about 20% from the highs that we reached during the peak of the Iran conflict as traders rapidly unwind the geopolitical risk premium that had been built into the energy markets. We've got a lot of optimism around a possible U.S.-Iran agreement. President Trump saying that he is about to make a final determination. That has eased some of the fears of a prolonged disruption in the Strait of Hormuz, of course, one of the world's most critical oil choke points. Now, at the same time, these falling U.S. crude inventories and some fresh warnings from Exxon that global stockpiles are approaching minimum operating levels are reminding investors that the market could still tighten quickly if negotiations break down or shipping disruptions persist. For now, though, Wall Street seems to be betting that diplomacy is winning out, pricing in peace, sending oil sharply lower and giving markets a nice boost on hopes that inflation pressures may finally cool as well. And some new data from Moody's is also showing just how much these higher energy prices are affecting Americans. Households have spent nearly $450 additional for fuel-related expenses in the last 3 months since the conflict with Iran began. Cumulatively, that has cost American consumers nearly $60 billion. Prices and airline fares surged. Moody's chief economist said that if the prices stay at current levels, the average household could take a hit of almost $2,000 at the one-year mark of the war. And the bigger tax returns that many Americans saw this year from this beautiful bill were more than wiped out, as the increase only averaged about $384 per household. Those were just some of the things that stuck out to me, Sam, but what caught your attention today?
Yeah, well, those space stocks, as you and Jenny were talking about earlier in the session or the day, fell back to earth after Blue Origin rocket exploded. Amazon was also under some pressures today because the company's satellite were on board that rocket. So AST Space Mobile falling as well in double digits because it very much relies on the execution and the cadence for its success as well. Now, Jeff Bezos also saying that everybody was saying it was too early to know what the root cause was. He called it a tough day and they'll rebuild and get back to flying because it's worth it. But the incident is really now being seen as a setback for Blue Origin, but also just goes to show how sending rockets into space and investing around that theme does come with a risk. It's not DRAMs. Another big week for memory. Speaking of that, Micron got yet another price target today. As I mentioned, a hike from Susquehanna, which took it to $17.50 from $600. The other story was that Samsung said it started shipping samples of its latest HBM4E chips. That new model is more than 20% faster than its previous generation. And that is really helping Samsung, that South Korean memory maker, get ahead of its rivals like local competitor SK Hynix and also Micron. So we saw some nice gains, and particularly Micron with that surge just in those final minutes, Marley. But heading into next week, what are we going to be looking out for?
And we'll get a better look at the state of our labor market. We have a slew of employment data coming next week. We've got job openings on Tuesday, ADP employment report on Wednesday. Then we'll, of course, have the initial job report Thursday. But the May jobs report coming on Friday. For that, the unemployment rate is expected to edge up slightly to 4.3%, while adding about 115,000 jobs in May. That would be down from the 177,000 that we added in April, but will give us a better picture here of what we're dealing with in terms of our labor market, Sam. And with the inflation data that we got, perhaps could give some more indication as to the Fed's path forward. But how about you?
We must attend. Yeah, obviously tracking these around negotiations with Trump, as you say, his comments around a final determination here. Let's see when we get that. But other than that, as we covered earlier, I mean, we've got a lot of earnings still to chew on. We've got HPE, Palo Alto, Broadcom's going to be a big one, and CrowdStrike as well. So plenty of tech names. We've got some Fed speak as well. Let's see what they say in light of some of that data you're talking about with the jobs. That is giving them some headroom at the moment to focus on inflation. But speaking of that, we've got PMI numbers out of the US, Asia, and Europe. I'm looking at the prices paid component, so that should give us an indication of just how much inflation is coming through at manufacturing and services level.
All right, well, that is going to do it for us this week on Market on Close. For Sam Bottis, I'm Marley Caden. Be sure to download our Schwab Network app, available in the Apple App Store, and tune in 24/7 on SchwabNetwork.com. Sam and I both hope you have a great weekend.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Trust. Hello and welcome to Market Overtime. I'm Sam Bardas. Our guest today is one of the most prominent voices in Bitcoin and digital assets. And this company has become one of the defining case studies in corporate Bitcoin adoption. Strategy is now adding another layer to that story. STRC Stretch, a new piece of its capital market strategy designed to support its Bitcoin treasury approach. STRC strategy's long-term Bitcoin positioning, institutional demand, ETF flows, regulatory clarity, and the question of whether Bitcoin's traditional 4-year cycle still holds. There is a lot to discuss. Welcome back to Market Overtime, Michael Saylor, Executive Chairman of Strategy. Thank you so much once again.
Happy to be here.
There is so much to get across, as we've just said. You and I last spoke. Bitcoin has come off, what, 40%? Where is it going from here? I mean, have we found a bottom, or do you think we see a deeper correction?
I think that we found the bottom at 60,000. The high was last October, about 125,000. I think we bounced off 60,000. We're in the mid-70s right now. There seems to be a good base for support. I expect we'll rally from here into a crypto spring.
I think a lot of my guests that I've been speaking to have been wondering why Bitcoin hasn't been gaining the same momentum as, say, stocks, for instance, which have continued to hit these record highs. And I'm just wondering what the fundamental catalyst would be to break through that heavy resistance we're finding just north of 80K right now.
Yeah, well, stocks are beneficiaries of the AI trade. There's a lot of capital flowing into the equity markets because of enthusiasm around AI and tech. That capital has been drawn out of the crypto market to a certain extent because many Bitcoin miners have been rotating into AI, high-performance compute, and they've been selling Bitcoin or they've been refinancing their Bitcoin to do that. So that's the headwind. Really, the drivers for Bitcoin right now will be macro. As we start to see a loosening monetary policy, that'll be very good for Bitcoin. A cessation of or a lessening of tensions with the trade wars and with the hot wars in the Gulf. Both of those are good. Bitcoin's driven by geopolitics. For example, crypto billionaires out of China, out of the Middle East, out of Asia, out of Africa. And so when they feel pressure, sometimes they're selling. It has nothing to do with the U.S. equity capital markets.
I'm so glad you mentioned that because I'm wondering how much of this move that we've seen is related to outside of the U.S. For example, the potential for a carry trade unwind with Japanese intervention coming from the officials over there, or that capital flight which has been catching a lot of attention out of the Middle East because of the Iran war.
Well, Bitcoin's digital capital. If you think about risk assets, you think tech sometimes is risk squared, and Bitcoin sometimes feels like risk cubed in a way. And the reason why is because it has the most free market in both yield and also leverage. So if when the crypto market is feeling a little bit bearish, they'll be 10x bearish. They'll lay on a 10x negative trade. For every one Bitcoin, they might sell 10. But when they're feeling bullish, they'll be 10x bullish. And so the market comes with a huge amount of volatility, but the volatility is because there's a huge amount of liquidity. The liquidity is because there's a huge amount of credit in this entire crypto economy. You have to factor that into your thinking when you're investing in it.
I do want to pick up on your thought about macro, because now obviously we're looking at, what, a 10-year yield at 460. I'm just wondering whether the higher sort of global yield environment right now is a headwind or a tailwind, with the Fed now looking to maybe remove that easing bias, and the market's now pricing out cuts and easing.
Yeah, I think the tightening monetary policy is a headwind. I think the hot wars are a headwind. I think trade tensions are a headwind. The tailwinds will come from a variety of other areas. The regulatory adoption, like the passage of the Clarity Act, the issuance of the innovation exemption for tokenizing digital assets and tokenizing securities coming out of the SEC, the formation of bank credit, like Schwab extending credit on Bitcoin, other banks extending credit on Bitcoin. That's a big tailwind. And then the explosive growth in the digital credit markets like STRC, which are taking up 2 to 3x the natural supply of Bitcoin this year, and just all by themselves.
I do want to talk about the broader crypto industry type of tailwinds and developments we've seen in the last 6 months, and also STRC. But one recent change as far as your strategy is concerned that's getting a lot of attention right now, I heard you talking about this morning as well, saying you would never sell BTC to now potentially. Would you sell or not?
Yeah, I think never selling Bitcoin is a good admonition for a retail investor and for someone now to just hold it for life and hold for a decade. We're a public company, so our objective is to maximize Bitcoin per share over the next, say, 7 years. The way we do that is by dynamically allocating capital. We have a dynamic capital allocation model, and on any given day, we can utilize cash, we can sell BTC, we can sell equity, MSTR, we can sell credit, like STRC. And normally our decision of which of those things we're selling or what we're swapping is a function of the Bitcoin price, the equity price, the credit price, and capital markets forward interest curves.
And something interesting also that you mentioned earlier today was the fact that you're buying Bitcoin at a faster rate than the miners can produce it. I heard you actually saying that you're probably going to buy all the Bitcoin that gets produced between now and 2140. I don't know how your succession planning looks over at Strategy, but how does that work?
Well, the miners produce about 450 Bitcoin a day. That works out to, say, $10 to $11 billion a year.
Right.
We bought $11 billion of Bitcoin so far this year, and we're not even halfway through the year. So we're already buying at 2x the rate at which they're able to produce it. The digital credit business, STRC, has been an explosive success. It's gone from 0 to $10.5 billion outstanding in 10 months. But we sold about $2 billion of that credit in May, which means we're at a $24 billion run rate. So just that one instrument alone is going to account for 2 to 3x the Bitcoin supply produced by the miners.
But how does that work from supply-demand type of dynamics? I mean, if you're absorbing everything that's being produced right now, if you're looking to buy Bitcoin, then you're looking to buy it within what is in circulation away from what is being produced as well.
Yeah, once we bought all the Bitcoin available by a natural seller, the price has got to actually move up. So the way to think of it is there's a consistent bid that covers all of the natural organic sellers. And once that happens, every single time $10 billion of capital goes into this market, that's 1 year supply or one turn on the axle. So, $10 billion or more may flow into the ETFs like IBIT. That's one source of demand. Banks are creating credit, so when a bank issues or creates $10 billion of credit against Bitcoin, that's another year's supply. Other companies like Strive are selling credit instruments like SATA, SATA. That's creating demand, and of course our company is creating massive amount of demand. All of those things are just turning the axle, powering up the network, driving up the price. And they have an effect of damping the volatility. One of the reasons, if you go back about 4 years, we traded down 75% peak to 12. And this time, the drawdown wasn't nearly as bad. And the reason why is because there's another source of demand consistently.
Right, I mean, it's becoming increasingly dependent on Bitcoin. I mean, it's broader investment, particularly from retail trading slows, and also because of the miners selling Bitcoin, as you've mentioned, to kind of fund the AI infrastructure build out. Is that true? And is there a risk of that being dependent on you? So
I wouldn't use the word dependent. I would say we have become a material player in this space. 5 years ago, we were not a material player. Now we are generating $10, $20 billion of demand a year or more. So that's significant. But also the ETFs like BlackRock are very, very material and significant. The other Bitcoin companies are also significant. And really, the elephant in the room, the really big players with the big capital are the big banks. You know, JP Morgan, Morgan Stanley, Schwab, Merrill Lynch, BNY Mellon, Wells Fargo. They're all to one extent or another coming into this space, creating credit, beginning to custody and trade this asset. And any one of them can be as big or bigger than we are. And all of it's bullish because no matter how many people are in the space, there's only going to be about $10 billion of organic supply at this price level. So logically, the price is going to move up as adoption increases and interest expands.
just to be clear, to confirm before we move on and talk about FDIC, last time you held about 640,000 Bitcoin, representing about 3%. How much is that now?
We're about 840,000 Bitcoin, representing about 4% of all the Bitcoin.
An enemy has been slain. Enemy rampage.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell. That's right. Payback is hard.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live on
Schwab Network, streaming 24/7, any sport, anywhere. Free. Schwab Network.
Trading Schwab is powered by Ameritrade, giving you even more specialized trades. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I've probably been at it 20 years.
Answer any questions I ever have makes a huge difference when you have someone that actually cares.
Okay, so let's talk about Stretch. You buy the Bitcoin to issue in different credit instruments for those who don't want to stomach the risk, obviously. So can you explain exactly how this particular product works?
Sure. This is asset-backed credit. So imagine I had a tower, $100 billion of equity capital, and I bought the S&P index. And I thought the S&P is going to go up 12% a year. Well, I could sell $20 billion worth of credit, and I could give you 8%. And I could over-collateralize 5-1. And so my pitch to the investor would be, I'll give you over-collateralized, structured equity-backed credit that will pay you 8% in some return of capital dividend. And if you don't want to get on the S&P roller coaster and take the 15% drawdowns to get to 12%, I'll give you a much lower volatility stable instrument. You'll get 2/3 of that. And there's a lot of people that like that. That's a structured product. Traditionally, banks have created and packaged that product and sold it to their customers. But you might ask the question, why did a public company like Berkshire Hathaway, why did they create that instrument? Because it's kind of a no-brainer. I would buy it. And the reason is because the Investment Company Act of 1940 precluded a publicly traded company from capitalizing on a securities portfolio. So, hence comes Bitcoin. Bitcoin is digital capital, but it's a commodity. So imagine I have $100 billion worth of capital equity now. I buy Bitcoin with it. I could sell $20 billion worth of credit, 5x over collateralize it, but now instead of paying you a fraction of the S&P return, I pay you a fraction of the Bitcoin return I expect. So that's about what our company has done. We expect Bitcoin to appreciate 20 to 30% a year. We're offering 11.5% as a dividend yield on STRC. It's structured and engineered to trade around par, which is $100.
Right.
And when it trades above $100, say $100 and a penny, we have a shelf registration, so we sell more of it into the market and keep it at 100. When it trades below $99, actually when it trades below $100, we won't sell it ever. If at $99.99, we wouldn't sell any of it. And when it trades weaker than that, say it trades below $99 for more than a month, we would raise the dividend, or we raise capital to collateralize it better so that we can strengthen the instrument to get it trading back at par. And so because we have these instruments of being able to adjust the dividend rate and raise capital and then sell the instrument when it's too strong, we can strip the volatility off it. It's traded with a vol somewhere around 3. The Bitcoin volatility is 40. And so we stripped the 40 down to 3. We've got it to trade right around 100. It's the lowest volatility of the major credit instruments. And the dividend we pay is a return of capital dividend. Because if you're disciplined in the way that you monetize your capital gains, you would monetize an unrealized capital gain, and you'd be able to offer a dividend, which is a deferred, a tax-deferred dividend. And so the magic of the instrument is we know that Bitcoin's going to appreciate more than 11% over time. We're transforming a capital gain into a credit dividend while we strip away the economic risk, the volatility, and we extract the cash flow for the credit investor.
So you have the ways, the means, the tools, whatever have you, to defend that $100 peg in order to meet those obligations, which is that 11.5% dividend. I mean, that's pretty attractive, right?
Yeah, a great acid test is you could have bought Stretch on October 6th of last year, or you could have bought Bitcoin. If you bought the Bitcoin, you'd be down about 35 to 40%, and you'd have no dividends. If you had bought Stretch, you would be holding par and you would have collected 7.4% in dividends. Now, if you're a long-term investor, I would say you're going to be better off buying Bitcoin, but you got to hold it for a decade, and you're not going to get cash flow. But on the other hand, everybody's got working capital. Like, I need the money to pay taxes in January or April, or I need to pay my kids' tuition, or I need to make payroll at the end of the year or pay annual bonuses. So people have that money they need in the next 12 to 24 months. That's normally sitting in a money market right now, paying 3.5% before tax and 2% after tax. If you believe in Bitcoin and crypto assets, you're like, well, I know it's volatile. I can't take the risk of being 30% short next fall, but I'd really be happy to get paid 4 times the money market. And I won't go to zero between now and next fall. It's going to do this, but I don't care because there's a company that's 4x over-collateralized it with a tower of equity that's going to strip away that ball. And in return for betting on Bitcoin not going to zero, and then trusting the issuer, I'm going to get paid 4 times the cash flow of my money market, and that seems like a reasonable trade.
So then how much does Bitcoin have to go up at least per year in order to meet those obligations?
We have a break-even level we calculate. It's about 2.6%. We have such a mountain of equity, $60 billion of equity capital, that Bitcoin only needs to go up 2.5% for us to pay those dividends forever. Now, if it goes up less than 10%, the common equity may not like the trade. Like it may not be great for the MSTR shareholder. For the MSTR shareholder to make a lot of money on this, Bitcoin needs to go up like the S&P. We need 10% or more, and then it's a good trade for the common equity. And between 2.5 and 10, it may or may not be a good trade for the common equity. If Bitcoin goes up 0% a year forever, we have about 40 years of capital, and in 40 years we got to do something different. But that's kind of the way to think about this.
Okay, understood. And back to the history lesson, which was very useful, by the way. That is why STRC needs to trade as a public company in order to trade on those brokerage accounts, right?
You could think of it as, think about annuities. I give you $1 million, you pay me 7% forever. I get $70,000 a year. I bought an annuity. That's a private investment contract. It's illiquid. We've kind of just created a public investment contract, a security. It's liquid. Instead of paying $1 million to a life insurance company to buy an annuity at 7%, you buy $1 million of STRC, you get paid $115,000 a year. And the reason the instrument works really well is we have a public common equity, MSTR. We have a huge tower of Bitcoin, which is liquid, 65 billion of BTC. And then we've taken public a preferred stock, STRC. And if you take the STRC public and pay a fat dividend, that's interesting. If it's tax deferred, that's double interesting. If you strip all the volatility away so I can trade in and out every month, that's triple interesting. So to make a long story short, STRC is the biggest preferred stock in the world in 10 months. It's the most liquid by a factor of 20 preferred stock in the world in 10 months. It's interesting. And we have become the biggest issuer of preferred equity in the United States capital market last year and this year. And because we're revitalizing an asset class that was big in the 19th century. We used preferred stocks to build railroads. In the 20th century, it fell into disrepute. If you got an illiquid 6%, dividend, and you got to pay tax on it, it doesn't look as good as a bond. It doesn't look as good as an equity. I'm bored of it. But when you get to the point where it's super liquid and that dividend doubles, okay, now I'll take a look at it. So we have created something out of existing components that have been around for 100 years, but we joined that preferred stock with digital capital, with Bitcoin, and the two of them together are a match made in heaven.
Yeah, it's sort of multifaceted, isn't it?
Your team has destroyed a turret.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Enemy killing spree.
Invest your way with Schwab.
Killing spree.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help give my family a happy financial future.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Rampage. Shut down.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. We worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with us with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college education. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
We must attend other matters.
Who is this product for? I mean, is it more sort of targeted for a retail investor?
It's spreading virally through retail investors. As far as we can see, 80% of the shares that are outstanding are being held in retail accounts right now. There's a ton of it in Schwab accounts, and Fidelity accounts, and Robinhood, any place where you could buy a share of stock. But that's not the whole story. It's also the #2 or the #3 credit holding in the credit indexes of BlackRock and Van Eck for PFF and their preferred indexes. So a lot of institutional credit investors are buying it. It's also proven to be interesting for corporations that like digital assets. They're putting large portions of their treasury into it, 50 million, like Strive, for example. Anchorage has bought it. And then it's an explosive force in DeFi, in digital finance, because it's powering all of these yield coins in the stable coin and the DeFi space. Because you can imagine, would you like a power source that pays you 3.5%, which is what a T-bill is, or would you like a power source that pays you 11.5%, which is what Bitcoin-backed digital credit is? So those DeFi tokens have exploded. More than $500 million. actually more than $700 million has flowed into these yield coins that are digital credit based. And they're probably going to become multi-billion-dollar entities this year at the rate they're growing.
And it only started publicly trading last summer, right? When you say the demand's been explosive, I mean, could you give us some numbers? I mean, just what's the magnitude of that?
Yeah, well, we brought the IPO in late July, and we thought it'd be a $500 million deal on Monday, and then it was $1 billion deal by Tuesday, and by Wednesday it was a $2.5 billion deal. And then we went into a period of seasoning, and in January, and by the way, this is all in a crypto winter. In January, it's a $500 million issuance. February was a meltdown, and we sold about $70 million. But in March, it came raging back. It was $1.5 billion issuance. In April, it jumped to $3.2 billion. In May, it was $2 billion. So right now, it's about a $24 billion a year run rate in its first year. It's hyper growth, growing about 400%. We don't know what it'll look like in the next 6 months. Literally every single day brings us new information. But it seems to be one of the most successful financial products of the decade.
I was going to say, I mean, I have seen that people have sort of described this as, you know, one of the best business models of all time. I mean, you know, some would argue that, as you say, it's a no-brainer, but I mean that
Your team has destroyed a turret.
it's too good to be true, 11.5% dividend. I mean, so you do have those critics and those skeptics out there who still call it a Ponzi scheme. I mean, why is it too good to be true? I mean, why is it a no-brainer? Why does it still, you know, I guess, get criticism for what you're doing?
If you walk down the street and ask people, do you want a bank account that pays you 11% that the government won't tax? Everybody's answer is, of course I want that. What's the catch?
That's right.
Right? And so what is the catch? It's new. And so we've been doing it for 9 months. And a lot of times people, 9 months after Amazon Prime free home delivery, 9 months after Netflix, 9 months after the iPhone launch, people were wondering, how big is this business going to be? And in fact, it took the public market 10 years to embrace Amazon's business model. There were 7 years where they weren't quite sure about Apple. So I think that there's a lot of conventional credit investors that will say, let's just wait 3 or 4 years and see what's happening. Otherwise, the risk factors are fairly straightforward. If you think Bitcoin's going to go to zero tomorrow forever, you don't want to own this. This is like owning, you're owning a credit instrument that pays you a fat yield on a building in Manhattan. And the way you lose your money is Manhattan sinks underneath the ocean. You're not getting paid. Or the manager of the building doesn't consider the building and burns it down. Okay, so we're the issuer. We're the manager of the building strategy. So if the issuer screws up, loses the Bitcoin or something, that's a risk factor. And if the Bitcoin network goes to zero tomorrow, that's a risk factor. If you actually believe in Bitcoin, it's not terribly risky. And fundamentally, the credit of the instrument's a function of your outlook of Bitcoin. So for example, if you think Bitcoin is as good as the S&P index, if it's like equity capital, then all of this stuff is investment grade. If you think that Bitcoin's going up more than the S&P, it's almost riskless, right? If you think that Bitcoin is a crazy thing, it's not going up, it's not going to go down, it's just going to stay volatile and gyrate like this, it looks like high yield credit. And if you are a hater and a skeptic, and you just think Bitcoin is going to fall 10% a year every year forever and go to zero, then this is highly distressed credit. So the beauty of it is you can calculate the credit risk with any AI program, with any statistical program, by plugging in your forward expectation of Bitcoin's price performance and plugging in your forward expectation of the volatility of Bitcoin. And the statistical models will give you your credit risk and break it down to a fair credit spread every 15 seconds.
This is obviously a credit instrument, and credit has become somewhat of a dirty word recently. I'm just wondering, you know, if people have expressed concern about this and how this is different to other credit instruments out there.
Well, there's $300 trillion of credit, and there's municipal credit and private credit and junk credit, mortgage-backed credit, and sovereign credit. And for the most most part, the credit markets have a bad reputation because they're yield starved, and a lot of it is return-free risk. You're getting paid 5%. You know, you're getting 100 basis point to 200 basis point credit spread over the risk-free sovereign rate, and you're expecting or you're accepting all this duration risk or delta risk or credit risk or illiquidity risk. And those are challenges. What we've created is something which is much more liquid. It's liquid every day instead of private credit. It pays a lot more than a junk bond or private credit. It's transparent. It's homogeneous. And that being the case, it represents a great risk-adjusted return. You can even measure it with the Sharpe ratio. If you take the return of this instrument, subtract the risk-free rate, divide by the volatility, STRC for the last 3 months running is the highest Sharpe ratio of any credit instrument in the world. In fact, it's a higher Sharpe ratio than any asset class, all the major equities, or even every hedge fund strategy. It's running like a 2.5 Sharpe ratio right now. So it's interesting. It's especially interesting if you believe in digital assets. And I think it will most appeal to corporate investors, institutional investors, and retail investors that they believe in digital assets. They believe in Bitcoin. They don't necessarily want to take a large directional bet on the 40 vol asset, which is BTC, or MSTR is a 70 vol asset. It's amplified BTC.
Right.
If you can stomach it, MSTR is the rocket ship, Bitcoin is the fighter jet, but Stretch is the passenger jet. Okay. It's meant to get to your destination comfortably. You're not going to get all the upside, but you're not going to pull the G's. We're not going to jerk you around either. And so it's a new additive instrument, which I think is really good for the space and helping grow the entire market.
So a lot lower vol profile when you look at Stretch.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Killing spree.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headline, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Schwab Network. Available anytime, anywhere, on any device for free.
How's it going? First day, so.
Sometimes, you know.
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support on phone, email, and in cloud.
Hey, Pop. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
No RA. An ally has been slain. Rampage.
Let's talk about the broader crypto industry, because you've raised a couple of points here. There's been so many changes, even just since you guys spoke about 6 months ago with respect to the whole crypto industry. I mean, some argue that more has changed in the last 6 months than in any other period of time. And one of the biggest changes that people have been talking about is the mainstream financial infrastructure and that shift from, speculation into, more of a financial framework. How significant is that?
Well, you can say that crypto is coming to the U.S. banking system, but the U.S. banking system is coming to crypto as well. Crypto, and so they're a big believer, and they're moving aggressively into the space. You see actions by Morgan Stanley, by Goldman Sachs, by J.P. Morgan, by BNY Mellon, by Wells Fargo, by Citi. Citi has announced they're going to move into crypto custody and credit issuance. So all of the bulge bracket banks that you thought weren't going to be touching this a year ago or 2 years ago are moving in the market. Meanwhile, you have the SEC enthusiastically putting out rules to allow for the tokenization of securities. And you see the U.S. capital markets and regulators getting ready for digital currency, digital securities, digital tokens, DeFi, digital finance. And as that happens, we're going to see a lot of the innovative new ideas that have been offshore in the crypto ecosystem coming to the U.S. All of that is creating a culture of innovation and a lot of excitement and growth enthusiasm.
I suppose I'm just wondering where that enthusiasm came from. I mean, why now? What has driven the fundamental change and the shift we've seen? Was it something in particular as far as, a meaningful catalyst that came, say, last year? Because I know the industry got a lot of tailwinds.
It started slow and it sped up. When we entered the space, we were the first public company. Then in 2024, BlackRock and a bunch of other firms, Fidelity, issued ETFs. That was the second big endorsement. But then in November with the Red Suite, you got a very pro-crypto, pro-digital assets administration. You got a head of the Treasury, Scott Bessent, who's very pro-digital assets. You're about to get an incoming, you've got a head of the Fed, Kevin Warsh, who's very pro-innovation, pro-digital assets. You got a head of the SEC with a very different view toward innovation, Paul Atkins. They unwound 100 enforcement actions, and they moved forward with very progressive pro-crypto, pro-digital assets rulemaking. You got then Selig at the CFTC, who also took the same position, pro-digital assets, pro-digital derivatives. Support in Congress, and that will convert what is a de facto support for digital assets into de jure support. And I would be remiss to point out that the other thing you got fair value accounting from the accounting profession. You got a raft of pro-crypto memos from the OCC, the FDIC, major banking regulators. And that was really important for the large banks in the space to decide that it was safe to wade into this industry and begin to support it. And that's all happened in the last 24 months.
Right, and I do want to talk about that move towards sort of more comprehensive crypto regulation with the Clarity Act. I mean, what clarity does the industry need right now as we start to see this progressing?
You know, I think there's a lot of enthusiasm for tokenizing of securities.
Right.
And if you're able to tokenize a security, I mean, the real appeal of tokenization is the asset holder has the ability to shop for the best yield and the best credit terms. And then the finance innovators, they can create new types of financial products, structured finance, they can tranche risk in very elegant ways, they can lever. In the DeFi space, you can loop something. So, let's say I can get money at 4.5%, I can invest it at 11.5%. There's a 7.5% carry trade. Wouldn't I like to loop it 5x? Well, now I've got 35%. That's very, very difficult to do in the TradFi world for the retail investor or for a corporation. In the DeFi world, they figured out how to do it a long time ago. The problem they had was they had very high volatility assets. Looping a 40-vol asset 5x is like cooking up nitroglycerin. It's very scary. Looping a 2-vol asset 5x just gets you to 10-vol. That's not unreasonable at all. So there are certain low volatility securities that you really want to lever in a structured way that people couldn't. What we'll see with the coming digital asset space is you'll see people being able to apply new types of leverage, new types of financial engineering. They can do it at higher speed. You can move your assets around. Right now, if I have $1 billion of Apple stock, I'm getting no yield on it, and there's no free market in it. It's not like I can shop it to 27 different territories on the weekend. What happens when it tokenizes is it starts to move. Now you're going to find more productive uses of capital. I'd like to get credit, but my existing bank will give me a 20% advance ratio at 8%. I would like an 80% advance ratio at 4%. You'll see a lot more free market activity. And I would be remiss not to point out that what happens when your AI wants to do 100 of these things every hour?
Right, your AI agent. And a feature of that is that it can be done 24/7, right? What does it mean for an institution like this?
It means you got to go 24/7, 365.
I don't want to work here 24/7.
What's going to happen is the AI version, the digital you, is going to get programmed, and you're going to tell the digital you what you would do if you could. The digital you is going to work 10 million times harder. It's going to be smarter, but it's going to do what you would do if you could work 24 hours a day. And if you thought 1,000 times as fast as you think, and it'll be working for your benefit to make you wealthier, healthier, and wiser.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Your team has destroyed a turret.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on the EBS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, anytime, anywhere, free. SchwabNetwork.com.
So what is unique about Schwab coaching is the community.
There's a lot of energy, kind of people are learning with you. You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 people.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps.
People learn differently, but all of those ways in which you teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
An enemy has been slain.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at SchwabNetwork.com.
Your team has destroyed a turret.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
We are veterans.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at SchwabNetwork.com.
Sometimes, you know,
An enemy has been slain.
you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers bring traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
Your team has destroyed a turret. Your team has destroyed a turret.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
You mentioned AI, the sort of is an acknowledgement from Trump that quantum computing has become the next layer of national security concern. I mean, obviously they're going to look at backing this from money from a previous administration. How do you respond to the threat of quantum computing, which some have even argued is what's holding Bitcoin prices back right now?
Well, you know, quantum computing represents a hypothetical threat to every digital asset, every digital service or product in the world, including Apple, New York Stock Exchange, every bank, etc. Our community is very well organized, and And there are many, many solutions that we've worked on for this. At the point that if the threat becomes reality, you'll see the entire network upgrade in a matter of months. Just like, by the way, Apple and Google haven't upgraded yet either. When the threat becomes reality, I think you'll see a parade of software upgrades and hardware upgrades everywhere in the digital ecosystem to address the threat. Right now, it's premature to do it because we don't know the exact nature of the threat. And so implementing a cure before there's actually a disease manifesting itself might be iatrogenic.
Okay. Just before we wrap things up here, Michael, crypto watchers like to follow these multi-year cycles. They have become somewhat of a sort of psychological guideline, I suppose, for the market. Does that pattern still hold, or do you think it's broken?
I think the 4-year cycle is broken. The basis of the 4-year cycle was the 4-year halving. And the first 12 years, in the first 4 years, half of all the Bitcoin that will ever be created was created in the first 4 years. And so you can see that there was a big 4-year cycle because after 4 years, the amount of Bitcoin being produced every cycle was cut in half. And we created 25% of the Bitcoin in the next 4 years, and then 12%. So we were really driven by the supply side for the first 12 to 16 years. At this point, the amount of Bitcoin that's being produced is becoming a small fraction of the amount that's being traded. In 2 years, we'll be down to 200 Bitcoin being produced. And so at that point, you're talking about 1% or 0.1% of the daily trading volume. And so really the price action right now is not so much being driven by the supply side, it's driven by the demand side. And that means the formation of bank credit. Banks could issue $100 billion of credit on Bitcoin in the next 12 months. That would be 10x the supply. We and the digital credit business, we could grow from 10, 20, 30, 50 billion. And so that's another multiple factor. And then you've got regulatory adoption and capital flows, and that could be $10 to $100 billion. So I would be looking at capital flows as setting the price based on the marginal buyer, because pretty much all of the Bitcoin that's going to be produced between now and eternity for the next 100 years is less than 1 million Bitcoin. My company will probably buy it all. But there is no supply. Right? The dynamic is not, is there any supply left? We're taking it all. The question is, will there be 10x or 100x more demand than there is right now? And that's a function of the banking and the institutional investors and general widespread adoption by the billions of people that can use this asset.
Michael, it's been lovely to sit down with you again. Thank you so much for your time. We have to wrap it up there, but thank you so much for coming to the New York Stock Exchange for us today.
Always a pleasure.
Michael Taylor there, Executive Chairman of Strategy. For all your market news, Bitcoin news and more, be sure to subscribe to Schwab Network YouTube page and follow us here on social media as well. I'm Sam Brown. Thank you so much for joining us.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk. Our team of passionate traders are ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
mom when my grandparents moved here. Did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
One thought drives us.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Callista. Yes, that was our name.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the market. Watch live on Schwab Network at schwabnetwork.com.
Unstoppable.
Welcome to Market Matters. I'm Marley Caden. Each week we are stripping away the noise to focus on the big picture economic themes that could have a place in your portfolio. Today we're heading to the intersection of content and Hollywood. Today's guest thinks the competition is stealth.
What we're competing with these days when it comes to movies, what Hollywood is hanging out on the couch on the weekend and having a pizza and streaming.
Joining us to break it all down is Seth Schachner, the managing director of Strat Americas and the voice behind Breaking Down the Biz podcast. Seth has been at the front lines of media and tech since the early days of AOL and Sony Music. We'll take a look at what's real when it comes to the new media bundle, the regulatory hurdles facing the giants, and where the business of being entertained is headed next. Seth, thank you so much for being with us. Now, I want to start a little bit with your background. You were there at AOL, music content deals, then you went over to Sony, Era, and Kmart. So you have such a relevant background, but also you were there at the beginning. Music AOL. What has it been like to watch this transformative world of music and media change into this streaming landscape that you have
Oh, thanks for bringing it up. It's great to be here with you. Interesting. A lot of, feelings around it, obviously. Sometimes I feel, and I know some of my colleagues feel like we should get a voucher or something for some of the early programs we tried to do, or some kind of bonus, because, the streaming business, particularly with music, is so robust these days. And I think some of the generations we see working on it don't realize that there was a period of time when things were so clunky and so early stage. I think I did the first digital download for music on it. It took 47 minutes to get the song. It was a big deal for us because I think we got 90,000 of them. To see the world now where everything's just a minute or a second to get something is really tremendous. But the thing that kind of comes to me all the time when I look back and look at the present landscape, particularly with music, is actually there's a lot of the same factors, the themes, the key business elements that we worried about and had to deal with in some cases are still very vital. They've shifted around a little bit, but some of the same structures and rights and businesses are still there. So it's spectacular to see it. I think the thing that is probably most prominent to me is, at least in music, artists have a lot of independence and power these days, which they didn't really have back then. But they don't have the ability to break through because there's so many pieces of music that are going out into these streaming platforms. That's probably the single biggest thing. But next to it also is just that the amount of content that's been made available since Napster days, and we had to do that when I was at Sony to compete with piracy. Sometimes makes it hard to really see recorded music in the same way as a business as we did prior to it. It's less of a business in some respects, and it's recovered and it's growing, particularly with streaming and subscriptions. But it's not the same as when we're seeing CDs or albums. So there's been a lot of shifting around in the landscape. But it's incredibly positive to see it, and it's positive to see that consumers accept it. There was a period of time around 2004, 2005 when we were starting to shift away from selling downloads, which we did to save our business from piracy, when we were extremely worried that consumers wouldn't accept the idea of renting their music, that they had to have that whole library of CDs on the wall or even their vinyl. And the idea of paying $10 at the time was really sticking people's craws, basically. They wouldn't do it. So I think that's been an enormous shift. It's not just music, obviously, the films and videos. And that's kind of gratifying to see it in many respects. That some of the things we were really worried about, we kind of overcame. So it's a really big question. And I don't want to go too off the deep end in answering it, but yeah, if that gives you a little bit of sense.
I'm going to doubly age myself here and say I remember the days of my binder of CDs that I used to hide under the seat in my car in New York and hope that someone would see it and steal my precious CD collection. And then on the flip of that, the 47-minute download, I think about Gen Z or even Gen Alpha right now. My daughter gets upset if Netflix even pops the buffering circle on for a second while she's waiting. Spotify doesn't instantly play. And
oh my God, we had our modem speeds were, I was 14.4 and 56K, and I have all these great graphics we can actually show of the original AOL music interfaces that I sometimes show when I lecture, do guest lectures or teach in universities, and they don't always get the snickers and laughs, and we'll zip up at some point to Shakira and Ricky Martin, but I show those phones that we did deals around, and I don't know if they deserve the laughs, but I think the big thing is that people should appreciate there were waves and waves of attempts before before we got to where we are, and it sounds like grandparents lecturing the grandchildren, and yeah, for sure. But it's also interesting in the last 3-4 years, like vinyl sales have come back, and people buy artists merchandise a lot, and it's interesting, some of the statistics. I think it's half the people who buy vinyl So they're buying them in some way to kind of connect with the artist. And, like my own daughter, who's no longer a teenager, had all sorts of album covers on her wall. Some from our childhood, Carole King, or some things that meant something to me, like Oasis, and then some stuff to her, like Chance the Rapper. But I don't think I ever saw the record played at all. So there's a lot of different perceptions they have about it and how they preserve that stuff. So it's definitely it's cool to see it, but it's definitely a little bit curious to me.
I may also be guilty of the record collection for aesthetic purposes, so I'm going to align with your daughter. I have not played any of them, but it's what it is. Everybody enjoys music differently. I don't know that I can even call that enjoying music, but it has its place. I contributed to the economy in my purchases of those records.
That's probably the biggest thing. That's huge. So that's good.
But let's zip over to Shakira and Ricky Martin. You said we were going to get there. Let's just do it now. You were at Sony for more than a decade. You had a focus in Latin America. And I remember Ricky Martin's first song. I was young, but I remember thinking how cool it was and watching this meteoric rise of this handsome Latin singer. And everybody knew every word to every one of his songs. What was that like to watch the passionate fandom, particularly in Latin America, but even more globally than that, for those two artists? And in what ways did it prepare you for sort of the fandom economics that are now at play with streaming and all of K-pop Demon, I'm going to go Netflix here, but K-pop Demon Hunters, Squid Game, Stranger Things, these massive blockbuster shows and movies that have this really core, dedicated following?
Yeah, it's a great question. So I spent 11 years at Sony. I always joke, I think the worst possible decade you could choose to do that when, the house was burning down. So it was 11 years of mergers and fun and musical chairs. I started a label called Jive Records prior to Latin, which we can talk about as well if you'd like to. But, I did go down to Miami, Latin America, to run their digital business in 2005. Sony sent me willingly. We left New York. You mentioned living in the city to go down there. It was all before the pandemic and everything, and Miami was still developing in some respects. And they schooled me, if you will, in Latin music when I got down there. I think Latin music is still enormous. What's obviously happened with streaming, to zip up to the present, around 2007, 2008, and I'm zipping through a lot of stuff here, if it's okay, Marley, but we launched services like Spotify, and a lot of others. I don't know if Americans know what Deezer is. Obviously, things like Pandora, a lot of Latin services as well. And so kids everywhere are able to listen to a track from Bad Bunny, or I'll mention an artist named Danny Ocean, who had something break out from Central America, all places, and don't really hear or care where it's coming from, whether it's coming from Korea or the Czech Republic or the USA. And that streaming connectivity, I think driven by Spotify and playlists, has been enormous. And I think to some degree that's why you're seeing these enormous breakouts from artists like Bad Bunny, or J Balvin before him, Karol G, if you will. I also see them as just really proudly rooted in whether it's Colombia or whether it's Puerto Rico. But it's enormously cool to see it. I'm zipping through a lot of stuff, but I think the big thing is that if you're in the business and you can figure out a way to have great business opportunities with smart artists and smart managers who will support you, that's how these things get done.
The music kind of paved the way for what we saw in television. They did it first, streaming the music. And spending 47 minutes to download your song. We did it. Pivot into your favorite movies, TV shows, access to all of your media. When you were watching this all go down, did you ever think we'd come to a point where we were talking about $20 monthly subscription fees or bundles and a $50 movie ticket?
So a lot of these verticals, yes and no. I mean, like for me, there's people, and I'll probably say, that the music folks is not the smartest ones in the shed in media. The Hollywood folks, where I am, always had all sorts of markets. So if you look at a Hollywood studio, not just the theaters, but video, home entertainment, paid, free TV, to kind of buffer them from, whatever wave will come over the regular business. We had one thing in music, so I actually did see that would actually be very positive. So we started at $10 a month, and we would compete against free. when we launch these things. So, but yeah, I mean, it is a little hard to sort of see how quickly it developed and how all prices kind of match up, basically. But at least from the audio and the music perspective, I mean, I think personally, I still think Spotify is an enormously good deal for what you get with what's in there, basically. Whether it's books or podcasts or everything under the sun. I think when you start getting into video, whether it's Disney Plus or Netflix or Hulu or HBO Max, those are actually a little bit higher priced. I think personally, I'm a supporter of that because I think the content that's in there deserves the higher pricing. I don't know if we could see it, the way it, at least from the music perspective, like the way it exists now, like when we set up Spotify, I mean, I was part of someone's team that set it up, the first one. Things that exist in the market now would never, ever, we didn't think there'd be millions and millions of independent artists just going directly like Bad Bunny to it. We thought we'll have to go to us and Sony or whatever. And so that landscape wasn't really something that I think that we really thought, would take place. So it's hard to kind of see far out into the future. But I think the real thing now is there's so many of these services. How many do you need?
Seth, I thought in advance of our talk that I would just go through and write down how much I'm paying per month for all the services, and I got about 60% of the way through, and I just stopped because it was not a number I wanted to share, nor a number that I had attempted to calculate because I clearly was blissfully unaware of what I was paying monthly for all of my services. But as we look at that, I saw this article, and I'm sure you saw it too, and there have been a few of them about streamflation, that we're watching gas prices go up, grocery prices are higher, obviously having constant conversations about inflation and increasing, especially with what's going on in the Middle East. But streamflation is the concept sort of that eventually something's going to have to give about either how many we're paying for or how much we are paying for these services. And I was looking at some data, and the BLS actually tracks the subscription and rental of video and video games with all of the streaming services. And in the month of December, that streaming category went up 9.5%, so almost 40%. For the month on the whole, it went up 0.3 overall inflation. So we are vastly outpacing overall inflation. I think some of that tied to those price increases we saw across several of the streaming services during that particular month. But are you anticipating that we are going, I know we talked about Spotify recently, but in terms of the streaming services, are you anticipating churn here? Are we going to hit a peak where people say enough is enough, I can't have all these services? And how are they going to choose?
I think, yes, I do. I think that since the streaming wars, broke out around 2019, this was always the question, how many of these things do you need and how confusing is it? So, yeah, I do think there'll be shakeouts, particularly with weaker ones, where people just stop subscribing. There's a little too much clutter out there right now. Definitely think you'll see some more combination of most of the video streaming services as well. And then, we talked about this on Monday when, on your broadcast, but the real bigger consideration is YouTube and all the capital they've got from Google sitting in there. There's been some Wall Street reports. I want to say it was Michael Nathanson's team. They are a different beast than a lot of what you're probing at and asking about, but there's still a subscription service also. And they've got obviously a TV service. The sports is part of this as well. So that's what I think the bigger entrenched entities like Spotify are probably eyeballing as more of a direct competition and trying to broaden and compete with them. So I think the thing I see with YouTube, and they're also in music, obviously, they're one of the biggest factors for discovering music, if not the biggest, is that they have a lot of short-form video content. And the discovery of that, music of that is very different, I think, than some of the classic sort of movies or television shows. So I think they serve a certain niche in the market, but their stuff is kind of different than Netflix for sure. So it's a mix of stuff. You don't want to be in a weaker streaming service or own a movie theater or a weak film studio.
Oh, we'll get there. But you said Paramount, then you said film studio, and you know, and any viewers that watch any of my shows know that I am just fascinated by this ongoing Hollywood saga that is the P-Sky Warner Brothers Discovery, formerly Netflix saga that was so ongoing, and just the consolidation in the space and the potential implications for the broader sector, but also as a journalist, the linear TV component that's at play here as well, with the potential combination of these massive companies in arguably one of the biggest mega mergers we've seen in decades. As you look at this, I mean, you said it's widely expected to continue, but you didn't say if you say you expect it to go through. So, Seth, what's your thoughts here? I mean, we've got, regulatory concerns. The EU seems to be the lowest on the list. They seem to say that's going to fly through there. But the DOJ has had some flags here. The UK CMA certainly has raised some concerns, more than hinted at that they may want divestitures, particularly tied to CNN, and we saw in one report. What are your thoughts here on the probability that this actually goes through and what it looks like if and when that happens?
I think it will go through. The shareholders already voted, so it's, and I think it's probably 60-40 and it'll go through. But I think, like with other things we've seen, where there's been, what I call it, daylight between the federal element, the DOJ or the FCC, and states, a state can make it very, very difficult, maybe even more difficult than a European entity. And I think California, our state here, has been pretty vocal about it. So I think there's some chance, whether it's there with some of the foreign regulatory entities, where you could see some limbs being grafted off. I'm not sure that's the best analogy. Maybe you do see businesses pulled apart and made available elsewhere, or maybe you don't, but they can certainly make it more difficult. But it feels to me like it's going to go through even without writing letters and the opposition that you've seen in the Senate. I think this one's much harder than Netflix got studio, and even with a lot of the pledges that are being made. I think I said this before. The biggest thing is there's a huge amount of debt, the $79 or $78 billion of debt. So it's going to be something where people service the debt, I think, is going to be a big part of dictating the strategy. And, the hope is that they keep making movies. I think they pledged to release 30, which is more than the combined entity did over the next year. I don't know what kind of movies, and if those are, day in the life, lifestyle, low budget movies, or what we know as Hollywood movies. It's it'd be interesting to watch that.
Seth, you brought up some really good points there, particularly about the number of films that were going to come out, because I have that in my notes. You were right with the 30. They had 19 in 2025. Ellison coming out and saying, we're going to give you this extra content. But also, same part of that conversation is all of the Hollywood actors coming out and saying they're concerned that there's going to be too much pricing power. Perhaps we have a monopsony on our hands, where they control too much of it. They can't get these mid-level and indie films made. Then you've got theater executives saying that the cost of the movies has gotten so out of hand that many people are viewing it now as this special night out, pricey special occasion, as opposed to when we used to just go for a regular day. Oh, day off from school, go to the movies. It's a Thursday night, let's go to the movies. Now I can take my daughter to a Cubs game for less than I can take her to the movies if I want to feed her. So it brings up a good point. If this goes through and that happens, and we're still seeing things like a $50 ticket to watch Dune 3 in IMAX, how does that change the setup as we know it, or does what we know not matter anymore because we're fading out of the primary audience?
Yeah, well, it's a little bit of all those things. I mean, I think you said a lot of things. I think so. On the movie theater stuff, I think the $50 ticket is not the norm. For places probably like New York, Chicago, and LA, for opening nights and specific, big theaters and hot titles like Dune, and in large format screens, whether it's IMAX with big chairs. I think it's targeted at that. It's not going to be the norm. The studios are going to have a huge outcry. So I'm hoping it doesn't continue to get expensive, but I do think, I'm not speaking as a consumer, I'm speaking as a business person. I can understand why they're doing it. If you're running AMC, the guy's got everything from popcorn he's selling to investments in mine companies and what it is. So I think they have to figure out a spot in the landscape. point you to something called record stores, which I work with. And they did it. So it is sensible for them to figure that out. I don't really know yet how this will affect really like what you're seeing in theaters overall. I think what we're competing with these days when it comes to movies, what Hollywood is hanging out on the couch on a weekend, having a pizza and screaming, a glass of wine, whatever it is, rather than going to the theaters, which is whether it's gas prices or traffic, it's your tickets, it's more and more expensive, just like we're talking about streaming choices. So I think that's a very big factor in terms of the abundance of streaming options. I think it's been more visible with the windows, meaning the amount of time those pictures stay in theaters, even the mid-level ones that you're asking about. 45 days is now what they call the window. So when a big studio releases something, that window before it goes to streaming platforms or what's called premium video on demand. So I think that's a key factor in keeping that window to save the movie theaters that are out there. But you're facing that windowing, the abundance of streaming, and hanging out at home having a pizza. And that's probably one of the biggest factors that's affecting it. The independent films, I'm a big fan of indie pictures, and I think that's also hugely affected me. I know you probably got great art houses in Chicago. We got them all over LA. I'll mention a chain called Langley's, which are old theaters, 100 years old. They're such a pleasure to go into, and you can go in and watch a great picture. It might be an Oscar nominee, and there's 6 people or something like that. It's a place that can seat 500. And so that, and you can watch that whether it's on HBO Max or Criterion Channel. And so that's really hard. I think it's harder on the indies than anyone, basically. But you're probably going to see less over time because streaming and home entertainment options and phone and everything keep getting better. So it's a hard landscape.
And Seth, we've talked about Hollywood, we've talked about music. There's another component to streaming that we haven't hit on yet in sports, live sports and the streaming of sports and where this is going in terms of not being the next big thing, it's going to be a huge thing in streaming, but it's arguably one of the hottest grabs right now if you're a streaming service. Ellison has made no secret that David Ellison wants to get his hands on as many sporting contracts as he can to bring them to his potentially combined larger company. But as we look at sports as a driver here, I mean, it's a lot of the sports games are streamed so widely now that they're not even on TV. I was trying to get the score of the Cubs game the other day, and it was only streaming on Apple TV. How is that changing the landscape for the American sports fan?
Yeah, sports the sports rights and sports events are hot. Still, they haven't changed that much. So I think there's always going to be an appetite for that, whether it's the Lakers or the Dodgers versus the Cubs. And so you're seeing rights go up and up and up. And I think not only are the traditional broadcasters winning it, it's NBC or CBS, you're also seeing streaming services coming in trying to promote themselves as well. I mean, the Apple baseball nights are quality of the night just was taken with how great the picture was. I was watching that Cubs game the other night. But it's a little bit of a mess because it's hard to find certain games. I agree with you. And, those rights are going up and up in terms of pricing. And so I think that's a big issue just for the overall ecosystem, particularly with the NFL. I'm a football fan too. They keep pushing up those rights for the NFL, the broadcast rights, and some of these entities, Paramount versus Paramount Warner, these are the same entities that are spending on mid-priced movies and funding television networks and have a lot of other businesses. So it will probably it could ripple throughout the ecosystem, basically. And meaning you see higher sports rights, you might see less movies, right? So that's a real concern over time.
It's harder to switch too, like before I could split screen on my cable service and have 3 games going simultaneously, but now I'm trying to go through my smart TV to make sure I have the right app on and I'm not missing an important play or an important out, or God forbid there'll be 2 sports in the same season and I'm trying to watch multiple sports at the same time. But we are running tight on time, so it brings us to a segment of the podcast that we are calling the Sprint. It is rapid fire questions. I just want you to say the first thing that comes to mind. It doesn't have to be any kind of formal answer. First question: best TV show of all time.
The Sopranos.
good answer. Best
Maybe
song
Mad
of all.
Men, but okay.
Oh,
what's
another
that?
good answer. Best
Best
song of
song?
all time.
Gosh,
I
Under
say
My
to the music
Thumb.
executive.
Under My Thumb.
Oh, okay. Best movie.
Apocalypse Now.
All right, a dark one. Most prolific artist of this generation, and we can sort of widen out this generation.
Prince.
All right. What was
He's
your
amazing.
AOL screen name?
Oh my gosh, Seth Shack.
You had such a good one. Mine was Bentley Rex, my dog's name.
Really?
It was
I could have had Seth at AOL.com because I was so early there, but whatever. Someone
Oh, you missed the boat on that. Someone had a great AOL screen name. Okay, you've got 20 plus years of industry experience here. Take us through your most Hollywood day that you've ever had. I'm talking like I had lunch with Spiegel at the Ivy.
I interviewed, I love Oasis and the two Gallagher brothers, so I did their first, there's a lot of stories, but I did their first online chat for them in the U.S. just before they went over to talk with Morning Glory, and we did it in D.C. with them, me and my colleague Ian McHugh. And, I spent the night with them and just hung out and got abused by them all night. They made fun of me because they didn't know what this American thing was. And so I had a big meeting in the morning. They wanted me to come out and hang out with them and go out with the band that night. And I was like, guys, I got to go. So that was my move. And I said, no, thank you, Oasis. But I still
I mean, hey, most people don't even get an opportunity to say anything to Oasis, so very cool. This last one I'm going to tell you actually comes from our producer, but his question was, do Shakira's hips lie?
Oh my God. But no, they don't lie. She's very cool and she's a real artist and yeah. she's the real deal. She's very talented and extremely hardworking. And she's the real deal. They do not lie. No.
Perfect. He'll be thrilled to hear that. Seth, really want to appreciate being with us today, sharing your expertise, sharing some of your background, and walking us through this journey that you've watched unfold as streaming became streaming, and now the streaming that we know it as. We really appreciate you taking time to
My pleasure. I hope everyone can check out my podcast. It's called Breaking Down the Biz. Thanks so much, Marla.
Of course, thank you. Thanks again to Seth for joining us on this episode of Market Matters with Marley Hayden. A few things really stand out to me from our chat. The first of which is how much streaming has changed how we view a night at the movies. Streaming and the cost of a movie ticket has made it more appealing to many people to just sit on your couch and have a glass of wine instead of paying $30 to $40 for a soda, candy, and some popcorn. Seth also says he expects to see some churn as these streaming services continue to raise prices. It's a cluttered field, as he called it, and as prices continue to rise in groceries, gas, heating and cooling your house, everything costing more, something is going to have to give, and some of that might be in your streaming subscription. That might be what gets cut, all thanks to what he's calling streamflation. Seth also flagged YouTube as a sign of passing in streaming is a piece than the other services. And lastly, focusing on music, artists have a lot more independence and control than ever before. It's easier to release music, but it's harder to break through. That barrier to entry has dropped significantly. The space has become increasingly crowded in the streaming era, and no traditional studios are no longer a prerequisite for reaching mainstream success for these artists. There was a lot of great stuff in there, but we are going to have to leave it there. I want to thank all of you for being with us today. This has been Market Matters. You can find us wherever you get your podcast. Please make sure to rate, review, and subscribe. I'm Marley Hayden. We hope you'll join us again next week.
We had a name once.
The rules of betrayal never.
Your turret has been destroyed.
Looks to close out May on a high note after a
achieving record after record this month. Small caps are the laggards, but let's get into a check of your scorecard. As we hit the lunch hour on Wall Street, you are looking at the S&P 500 better by 0.25%, similar to what we've been seeing. Tech is the leader here in terms of the sectors of the S&P 500. The Dow right now better by 0.75%. Watch those industrials start the show today. NASDAQ 100 higher by 0.25%. Russell 2000 right now taking a step back, off by 0.5%. Here's the roadmap for today's show. We'll look at example option strategies for Amazon, which is in focus after Bezos' Blue Origin rocket crashed yesterday. Plus, the team from Folio will join us with new sentiment data on Apple. And finally, NVIDIA is on our radar today. Some investors ask the question, why isn't it seeing a euphoric rise like other AI players? Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Tom White in our Chicago studio, fresh off his sabbatical, rejoining us. And you've got Kevin Green, senior markets correspondent, joining us once again today. So we've got Wall Street gaining more ground today. President Trump posting on Truth Social that the Strait of Hormuz must be immediately open. This is a quote, no tolls for unrestricted shipping traffic in both directions. It underscores some of the reporting that we've seen since yesterday. Tom, these are probably similar headlines to what you saw before you went on your sabbatical, and now you're coming back and seeing the same headlines. What's your thought as we look across the market?
Yeah, it seems nothing's changed, Diane. It's good to be back with you. I think one of the concerns that I have here now at these levels is, it's being driven by probably fundamentals on the corporate side, right? Earnings have been good, and every time it seems like we're going to take a lull in the market, we'll get another earnings report like Dell, like Snowflake yesterday that kind of propels specific sectors. I mean, you've got the NASDAQ 100, the NDX up 10% so far this month. The S&P 500 up over 5%, so hitting more record highs, pulling back here in the Russell a little bit, but we're starting to get extended on a technical basis, and maybe KG can hit on this a little bit more than I can on the technical side, but we're getting extended. Those RSIs in the S&P 500 above the 70 level, the RSI and the NDX about the 76 level, so we're getting extended here a little bit. The forward PE for the S&P 500 above the 21 level. So yeah, it seems like we're getting a little bit over our skis, but I think everything is falling back on the fact that oil's down over 1%, near $88 a barrel. That's helping. President Trump is meeting right now, according to reports, to come up to some of the resolution on this memorandum of understanding. Is that new that we're talking about? It's not going to be, it's extending the ceasefire, but it's not a full de-escalation of what's going on in the Middle East. So that's a concern also. But, if this market is resilient and the sell in May can go away adage that was, here for, a majority of our trading careers the last 3 or 4 years, it's been out the window, basically, at this point. So, just strength across the board. It seems like money's just chasing more money at this point.
Yeah, absolutely. That adage being put to the test once again in favor of bullish investors. KG, your thoughts when you look out at the market today as we close out the month?
Yeah, we do have month end, so I think that's also fueling a lot of these stocks that are rallying to the upside here. If you're looking at market breadth, it's only sitting at about 44 to 45% to the upside. And a lot of that's concentrated in information technology sector here. And you kind of pull back and look under the hood, it's actually software. Software is actually doing a phenomenal job today. Some software benchmark ETFs that are moving higher today, up 3.5–4%. You have Palantir moving higher, Microsoft breaking above this 440-ish area. That's where you see a lot of this end of the month rotation. Now, when it comes to the geopolitical risk, I think the market is still optimistic. The market is still pulling back here, but it's the same language that we've heard over the last 2 weeks, 3 weeks, 4 weeks, 5 weeks. It's the same packaging. The market's okay with that. The algorithm is working. So, and we have made this escalation and then also which is something we've not seen throughout this conflict, but the market's going to shrug that out, at least for now. I think the deal actually is done here today. It is Friday as well, so it's going to be a 50-50 shot. Pushing back and saying
legacy business wasn't bad either. Tom, your thoughts?
Yeah, I think you take a look at, those revenue growth numbers, 88% overall, and then the growth in the AI segment, over 50% growth from year-ago levels. So, when Dell earlier this year took a little bit of a hit after a nice rally last year, it's not surprising because the growth is there at this point. You take a look at some of the demand that they talked about, $16.1 billion in the AI server revenue. This just kind of leads into the fact that, hey, this investment in AI is not going away anytime soon. And then you talk about a bubble potentially in this space. That can kind of be pushed aside from some of the results that we've gotten recently. So demand is still outstripping supply at this point, and this kind of fits right into that narrative with Dell at this point. And then you get the guidance raise also. That's going to be a benefit for this company moving forward. But yeah, it seems like they're firing on all cylinders. This was the fastest pace of revenue growth since they went public again in 2018. So earnings report guidance was better than anticipated also. So there's not really much that you can say. And up 28%, it just feels like goes back into my narrative that, hey, money's chasing more money. And as these investments continue to grow and these companies are able to monetize that and get their margin growth and their revenue growth the way that it's going, yeah, it's not surprising that you're seeing this. But, you look at the technical side of it, yeah, it's getting up there. But at the same time, are valuations expanding in these names when they jump 28% in a day? Probably not, because the growth is there for the company at this point. So, yeah, you start looking at valuations, and it's not a head scratcher, it's basically math, right? That the growing like this has the optimism continuing here for investors.
Surely continuing. I mean, I know we're off the highs of the session, but 28% is nothing to sneeze at. The COO telling us that the AI opportunity shows no signs of slowing. KG, your thoughts on Dell?
I would agree with Tom. I mean, obviously everybody was focusing and has been focusing on the artificial intelligence portion of their business, which is a smaller subset, but it is starting to grow and be really meaningful when it comes to top line growth here. But you brought it up earlier. You also saw the traditional businesses actually see fairly healthy revenue on a year-over-year basis. The Client Solutions Group, which includes the PCs, we're up 17% on a year-over-year basis. I mean, we have seen that kind of industry really in its own little recession or slowdown here pretty much since COVID-19. Now, we might be seeing a refresh cycle, especially if the CPU enthusiasm actually does kind of take hold when it comes to the consumer as well as enterprises, which it appears that that's going to be the case. But that's just going to be icing on the cake for this company moving forward here. Now, the move to the upside, I think you are also getting into the fades here, Diane. We've seen this over the last couple of weeks. Snowflake's a really good example of that. Once they have, let's say, really good earnings, there is a lot of money that's being put into these names here, because we have seen NVIDIA 3 years ago doing the same thing when it comes to these growth rates. So I think there's also maybe some nostalgia there for some traders to really try to have the same type of reaction or result that we saw, or price action that we saw with NVIDIA a couple of years ago. I think it's higher. Technically speaking, though, I would not. This doesn't look too overdone given the fundamentals. And then also, when you look at some of these other names that have really great reaction post-earnings, like Snowflake, we have those stocks that should have follow through days. In fact, Snowflake today is still up about 4%. So this might not be over with when it comes to Dell, even though we are seeing a pullback on an intraday basis.
Okay, we don't have all winners today. The retailers, it is a different story for them today compared to some of the retailers we were talking about yesterday. Gap sliding. I always have to catch myself because I remember the old ticker GPS. It's now its name. The ticker down 16%. American Eagle also sliding off the back of its results. Gap says they missed the mark on what consumers wanted. Tom, I thought this was going to be a story where Gap was going to say, oh, the consumer is showing some weakness, but they didn't say that. Your thoughts?
Yeah, that's one of the things that we've talked about with retail sales data, the health of the consumer, some of these sentiment and confidence numbers that have been waning. They're still spending. I mean, this wasn't a horrible report by Gap, but the biggest contributor to their earnings, the Old Navy, they said they got wrong, right, as far as what consumers wanted. So that's going to be the reason that you're going to see those expectations for revenue for Q2 down 1%. The street anticipated that those would be up over 1%. So that's kind of the pullback there. EPS outlook for next for full fiscal year 26. Raise that. So not horrible in that scenario, but this mix in the retail space, that's going to be a concern here, especially on the Gap side, right? It seems like this is one of those top names that maybe one segment of their business will do really well, then another segment like maybe this quarter will drag them down a little bit. So are there any expectations that that retail like Gap will do extremely well? Well, when investors see results like this and when they're cutting guidance for the next quarter, there's other areas within the market that they can go and maybe get some growth, especially on the tech side. So maybe that's why you're seeing maybe an overreaction to the downside here in Gap.
Who the view was he was going to come in and really shake things up because he was courted, Richard Dixon was courted over to Gap. KG, your thoughts on either Gap or American Eagle or just what that landscape looks like?
Yeah, I'll take it from a technical standpoint because Tom did a phenomenal job when it comes to the fundamentals. If you look at this pullback right now for Gap, we have seen some buyers actually stepping in at around this $20.50 to $20.70-ish area. Back in May 19th, we actually saw the stock trading at that level before it actually moved aggressively higher. So having a pullback, check back, and having buyers step in here, not a bad sign, especially for a company that came out and pretty much admitted that they were not able to execute from an operational standpoint and then conceded that the consumer still looks relatively healthy. Let's look at also American Eagle right now. Yes, it's down about 13% on the session, but the candle is actually still green here. We saw this flush. We have buyers stepping in. And if you actually look at the internals, and I have an indicator that shows this here, if you're looking at up volume compared to down volume, the majority of the volume today has actually been on upticks, which is indicating that buyers are stepping in, whereas only 17% has actually been on downticks. That's meaningful. That means that there are strong buyers at these particular levels, even though the fundamentals were not that great for the quarter here. So technically speaking, all is not lost. Now you have a gap that you can test to the upside. Let's see what happens over the next couple of weeks if these retailers want to retest that gap. Because it doesn't really take much to fuel these names higher, especially if we still get relatively strong economic data from a consumer standpoint. All else being equal, let's say that.
All right, back over to some winners. Cybersecurity. Wall Street getting more bullish on CrowdStrike and Palo Alto Networks ahead of earnings next week. You got both shares moving higher by 6% and 7% today. You got earnings due from them on June 2nd, June 3rd. Tom, your thoughts on these names?
Yeah, the optimism going into these results with the stocks at or near all-time highs here. They both report next week. That's, I think if you take a look at what's been going on in some of the software names especially, because remember, a lot of the cybersecurity stocks got hit a little bit on that SaaSpocalypse, right? That some of these software names, and they threw cybersecurity into that bucket, we're going to get negatively impacted moving forward by AI. But Jefferies came out raising their price target on CrowdStrike to $775 from $500 ahead of their report. Palo Alto, they put a price target of $300 up from $265 on that. So they expect some pretty good numbers coming out of earnings next week. Now, the bar's really high going into these results, right? What impact, positive or negative, is AI going to have on their results? And I think one of the key takeaways from some of the commentary was that when AI came out initially, the SaaSpocalypse happened, these cybersecurity firms actually said, we're going to need more of these, these subscriptions from these companies to kind of offset what AI is going to be able to generate, against these corporations that have subscriptions with these, cybersecurity companies. And I think that's going to be key. What kind of outlook these companies give next week with that bar as high as it's been, especially going into these results with the stocks at or near all-time highs.
KG, your thoughts on these two?
Yeah, so these names are a little bit different than, let's say, a Dell. So if you're kind of looking at the price action, especially from the earnings that we just saw 3 months ago here, the stock price appreciation has definitely stretched the multiples. Now, you can make the case that it may be a CrowdStrike or Palo Alto Networks were very oversold, and now it's the catch-up trade. But I do think that there's a high bar when it comes to the fundamentals for both of these companies for this report for next week. And in fact, if you're looking at Palo Alto Networks, it's still trading at around a 71.5 multiple. Earlier this year, it was trading at a 40 multiple. So you can kind of just do the math there as far as that price action. But if they are able to beat and exceed the street's expectations, that's probably just going to fuel more of this rally to the upside for broader equity market in the technology space. But I think this is a very high bar for them. And kind of both of them actually kind of have the same type of customers in some respects here. So there should be a little bit of a challenge when it comes to market share for both of these names.
All right, guys, so let's put a pin in it. We've got bull versus bear coming up. The guys will get their example trades put together for Amazon. It's navigating choppy waters today. We'll have more Fast Market after this break.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-cloud.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen force of family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with the job for a long time.
Jim, my financial consultant. I probably met 20 years.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Welcome back to Fast Market here on Schwab Network. Shares of Amazon are slightly lower after a setback for its satellite internet ambitions. Yesterday, Blue Origin New Glenn rocket exploded during a test in Florida. Amazon had planned to use New Glenn as soon as next week to deploy 4 dozen satellites per mission in a bid to accelerate its build-out to compete with Starlink. The timing is critical, with Amazon seeking an FCC extension as it races to meet a July 30th deadline to have roughly half of its planned satellite network in operation. While shares of Amazon are lagging today, that stock is up 3% this month. All right, time now for the tug of war on Amazon. For that, let's welcome back in our co-hosts Tom White and Kevin Green. Guys, it is bull versus bear time. Before we get to your example trades, we've got to get each of your thoughts on Amazon. KG, I'll start with you. Your take.
Yeah, I mean, the Blue Origin situation, it's unfortunate, but at the end of the day, there is a perceived risk when it comes to space exploration. So you're going to see an initial reaction to the downside, but over time, the market's going to shrug that off because Amazon is really the bread and butter of it right now is AWS as well as its retail business, and those are both still relatively strong here. So it's an unfortunate situation, but this administration, I do have to give them a lot of credit. They have been really flexible when it comes to trying to expedite a lot of these space exploration companies like a SpaceX getting those approvals so they can launch satellites into orbit a lot quicker than what we've seen in the past. I'm sure Amazon is going to see, or Blue Origin is going to see a little bit of a setback here, but maybe not one that's going to take them years in order for them to get right. And I think there's probably some optimism there. It's a small slice of the overall vision of this company over the next 2 to 3 years.
Okay, great points there. Tom, your thoughts?
You take a look at Amazon, just the different silos that they have for revenue generation. I mean, if you look at the chip side of their business, they talked about that 40% growth quarter over quarter last earnings at the end of April. Then you throw in AWS, that growth was up over 28%, and it's supposed to accelerate to over 30% growth in the coming quarters. So, yeah, you've seen that re-acceleration over the last few quarters in AWS. You throw in the fact that the consumer's still out there spending, despite the fact that oil prices are higher and confidence levels and sentiment numbers are down from the consumer. And then you throw in advertising. That was up to $70 billion in the full fiscal year. That was growth from $50 billion from the previous quarter. So you start looking at the areas where they continue to expand. And Andy Jassy, I think, as a leader, has done a great job in controlling all these different segments within their business and still showing a solid and outsized growth in all of them. As they move forward, CapEx spend, yeah, that's been a concern from some investors, but the stock's only a couple percent off its all-time highs. It just feels like, the different segments that make up Amazon at this point start to level the playing field. They're not relying on the retail side, or they're not relying just on AWS growth at this point. They've got a bunch of different levers to pull here, and that's why the stock has done so well.
All right, let's get into the example trades. KG, let's start out with yours. What's your approach today?
Well, if you're kind of looking at it from a chart standpoint, we do have a lower high taking place right now. We've been leveraging the 20-day moving average as an area of support, but we are also making lower highs on the RSI. For whatever reason, seasonality of the last 5 years, starting in June, we usually do see a pullback within this name. Now, it doesn't seem like that's a broad market situation. It seems like it's just company specific. Yes, you have some headline issues as well. So I'm actually looking at for an example trade, a pullback in trying to retest that 20-day moving average in blue here. So looking at the June monthly expiration, June 18th, 265 puts, going long outright on this at $4.85. So the max loss on this trade is $485. Max profit is $26,015. That's if the stock goes to zero. We have bigger problems if Amazon's trading at zero by the time of expiration here. And break-even point is going to be $260.15. This is a trade where you want to be able to identify your take profit level as well as the stop loss level. And because we do need to move here within the next 18 days. So you will have time value erosion going against you for this trade. When you have a sharp pullback to that 40-day or even break below, this trade may be possible. So I'm curious to see what Tom thinks about this trade setup, given the technicals as well as maybe some of the near-term risks.
Yeah, we've seen, with the stock at these elevated levels just below record highs, that implied volatility levels are down. So Kevin's example trade here to the bearish side may make sense if you think the stock's going to fall over the next basically 3 weeks. Got 20 days in this. Let's break it down. June 18th, monthly options, buy the 265 put. You pay roughly about a 485 debit. Probably pay about 420 right now because the stock has moved a little bit higher today as equities reach session highs here. But you pay that 485 debit, there's your risk, $485 per spread. As Kevin mentioned, the break even just above the $260 level. That break even is about 4.5% below the current share price. So as KG mentioned, you need a move to the downside for this thing to start to expand. But if you do get a move to the downside, what historically happens is implied volatility levels start to go up also. And that may expand the price of this straight put purchase here for downside exposure on this one. Now, I mentioned you need about a 4.5% move to get below that break even. The probabilities are against a trade like this, but at the same time, it's still risk defined. You know exactly what your downside is. And it gives you that flexibility as far as trade management goes, because you don't have to wait the full 20 days to potentially profit or get out of this trade. The market's open, and this stock maybe goes down to $260, and this thing expands to $6 or $7 or $8. It gives you that opportunity that maybe, hey, I can close a portion or all of it if the market's open. So it does have that flexibility as far as trade management. Buying a straight put with lower implied volatility also lowers the risk of this type of trade because extrinsic option premium contracts when you've got implied volatility levels where they are, which is about 24% on an IB percentile level. So in the bottom 1/4 of what we've seen implied volatility over the last 52 weeks in Amazon. So there's Kevin's setup to the downside. I'm going to flip the script here. I went a little bit more bullish, but instead of just buying a straight call, which would be a bullish type of strategy, I looked at offsetting some of the costs. So I looked at a bullish call vertical here. Went out to that July cycle. So also giving myself some duration on this one. It means I'm going to have to pay more for this type of vertical, but it also gives me more time, and that's why it costs more. But going out to the July monthly options, buying the 270 strike call in the money by a couple bucks here. It's got that higher delta. That's the bullish portion of this vertical. And then against it, sell the 295 strike call. So a bullish $25 wide call vertical. You're paying roughly about a $9 debit. You might have to pay a little bit more, maybe $9.20 because the stock has moved a little bit higher. But the debit you pay is your risk on this one also. $900 per spread on this one, but that can expand to $2,500 if it goes up to above the 295 level. Now, why did I pick the 295 strike? When you go out to the July monthly options that expire in 49 days, you got a plus or minus $26, $27 move that the option market's pricing in. So that lines up approximately near that 295 strike. So Kevin, bullish $25 wide call vertical. I'm offsetting some of my costs on this directional vertical, but the same effect goes in. You know, you pay a little bit less when implied volatility levels are lower, but you definitely need to move to the upside on this one to that break even at 279.
And that's pretty much where the highs were back in, let's say, early May your time. So you're leveraging that short call position to offset the long call you're buying. But you also have a decent risk-reward ratio with a risk-reward ratio. Try to get above, that 2-to-1 if you could. As quickly, and you once again boxed in some of that big decay by selling the upside call. But you do need to move. But the primary trend has been to the upside, at least for now. If you do continue to see a break above those highs, and you still have a lot of this enthusiasm when it comes to the technology trade, Amazon could be a beneficiary of that. And this trade also gives you some flexibility to manage the trade against you, right? If it goes to the downside, it won't be as aggressive as if you were just going just straight long the call here.
Yep, you make a good point. The flexibility as far as trade management, you'd have to wait, the 40 some odd days to, close this trade. You can close it. The market's open. It starts to expand in price prior to expiration on this one. About a 2.3% move to the upside to get above that break even at 279 on this one. So there you go, Diane. Both strategies taking advantage of lower implied volatility with that flexibility as far as trade management, but definitely opposite sides of the spectrum on Amazon.
Yeah, indeed. And one of the things that stands out to me is what KG said. We have bigger problems if Amazon's going to zero. All right, guys, we got cash tags coming up. The portfolio will be along with new sentiment data on Apple. Stay right here on Schwab Network. Fast Market will be back after this.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone in platform.
The wounds of betrayal never heal.
My parents talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 in credit card debt. That's when I kind of realize that right, I have a money problem.
We must
This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. We were purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Andy Swan, co-founder of Likefolio, taking a look at Apple today. We've been talking about how May has been for the broad market this month. Just better than you would have expected it, Andy. And Apple, I mean, it's had a fantastic month this month in terms of its share performance. You got new sentiment data. Can you walk us through what it looks like now?
Yeah, Apple's performing extremely well in the stock market, and we've been saying it's performing extremely well on Main Street for quite a while. It's one of the strongest names in our entire Likefolio coverage universe. We've got a Main Street score of 91 out of 100. That's about as high as it gets. That tells us that demand for Apple products, whether it's iPhones, Minis, and even Apple Watches, is surging through the roof. And we think that Apple just at this point has a fulfillment problem much more than a demand problem. The iPhone 17 has been a phenomenal product, probably the most successful in Apple's history. Their shift to services has been extraordinarily successful and continues to grow. When we look at Apple versus the rest of the tech field in terms of consumer demand level changes, Apple plus 20% year over year, whereas Microsoft, Meta, Google, and Amazon are all under 10%. So Apple's just, performing better than anyone else at this point. There's really it's very difficult to come up with a counter argument. I tried coming onto the segment to think, okay, what could be the counter argument against Apple here? From a Likefolio perspective, there isn't one, because they continue to capture market share. They continue to build out the ecosystem and make it more addictive. And more importantly, they make their ecosystem drive revenue at a greater and greater rate and capture more of each iPhone ecosystem holder's wallet every single day. So Apple's looking really good here. I think that as we head into the developer conference in early June, that will be the next kind of inflection point, because I think everybody's waiting to see what will Apple's AI roadmap be. And that's going to be the big inflection point. We want to see a clear roadmap that actually embraces AI rather than kind of sitting on the sidelines and that sort of stuff. So that's going to be the next thing we're watching for. But right now, iPhone, Apple TV, Apple Watch, all of it is absolutely surging on Main Street.
Hey, Andy, quick question on here. We always talk about valuations on Apple because it gets more expensive, right? The trailing PE is about 37, forward-looking PE about 35, but they're growing into that valuation. So I see that part of it because we have the super cycle with the iPhone 17. Worldwide Developers Conference is coming up. You know what, Andy? This stock initially got hit pretty hard when they kept delaying Siri, right? But they're not putting out the CapEx numbers like some of these other big tech companies are because they don't have to. So is that the key here, where they're growing into this valuation, and according to your data, it seems like, demand's not going down anytime soon, so they can navigate this and not have those extra costs that all these other tech companies have at this point.
Yeah, I think it's been a huge advantage for Apple to not get into the chase, to let Anthropic and Google and OpenAI, all of them fight for creating the best model and for all of the costs associated with that. Apple hasn't had to stomach many of those. Now, we're all frustrated as Apple users that Siri is terrible. Compared to clicking onto ChatGPT or Claude or whatever tool you like to use, Siri is very disappointing. But Apple's in a position, they have the distribution network. They can sit back, wait for the winner, wait for the best deal to come to them to integrate, and I think that's probably what they're going to do. And, at some point, especially as these companies head into their IPOs, who gets the Apple contract is probably the biggest prize out there. So Apple's really in the driver's seat in terms of integrating these third-party AI tools, and they've done a good job of just saying, I think we can wait and then pair up with the winner. I think that's their plan. And, I was skeptical 6 months ago. I thought, Apple's falling behind, but Apple executives know better than any of us what they're doing. This is one of the best corporate teams on the planet, and they've executed this pretty much to perfection. And now I think they're in the perfect spot to partner with AI and LLM providers to give them the best deal and their users the best experience.
Tom, Andy makes a good point about, and I'm going to interpret how he said that basically, doesn't matter them leaning more into AI. Now, according to Bloomberg, they're going to release an overhaul of Siri at the developer conference coming up June 8th. And it's going to have a revamped Siri, new chatbot style apps, and, other big changes to be seen what those are. But I think that's the question. Like, you make the point that demand is so high. I know of one anecdote where someone went to buy the iPhone 17. They didn't have it, so they got a 16, but they told them, okay, come back in a week. You can trade that back in. Are you hearing things like that where demand is so strong, they're like, okay, we'll just take whatever device you have, but we're going to come back and get the 17?
Yeah, it is happening. The one thing that the problem Apple has is that there is so much competition out there in terms of buying compute, buying memory. Everything that goes into the things that they make have gotten more expensive and more difficult to obtain. So that's the supply side of the problem for Apple. It's getting more expensive to supply these devices to their customers, and it's harder than ever for them to fulfill those orders. I've seen, Mac Minis going on the secondary market for 50, 80% premium to what they retail for, because you can't get them in the store, and people want them to run their Claude instances and to create their new apps and everything that's going on in the vibe coding community. So demand has completely outstripped supply at this point. It's kind of like NVIDIA was 18 months ago. Apple's problem clearly is not Main Street demand. That is surging, continues to surge. If you want to know if the Michigan Sentiment Index has any relevance anymore, just look at what's going on at Apple. The consumer, at least the people that can afford iPhones and Mac Minis, are doing extraordinarily well, and they can't get enough.
Hey, Andy, one quick question, here before we let you go. You look at that chart that you have. This is the scary part for me, because we always talk about you guys when you have diverging type of data, right, where maybe, demand is far above the stock price, but they're kind of in line right now. So your outlook moving forward, going into the Worldwide Developers Conference in about a week and a half, I mean, it seems like it's set up like maybe this stock should pause right now, or are you guys looking that maybe that'll be another catalyst to the upside?
I think that could be a good catalyst to the upside. We'll have to see what they come out with. But in terms of the stock price now, if I'm not holding Apple right now, I'm just thinking, okay, anytime we get any sort of pullback, which has been rare in the market over the last, 5 to 8 weeks, but if we get any sort of pullback, this is one that I'm going to have on my radar to pick up shares, because the one thing about our charts, this light below demand chart, it is moving up and to the right, and it is accelerating in terms of that move, and it's getting, much steeper at this point at very high levels. So I think the stock is priced pretty fairly, but there's still upside to go because the consumer just isn't done with this one yet, and it's not even close. So for us, Apple is a permanent buy the dips until further notice type of stock.
Good stuff. Thank you, Andy. That is Andy Swan, co-founder of Likefolio. Now, for the trading perspective of all things Apple, Tom, you got some insights from the Likefolio team. I mean, who knew at the beginning of this year this would be where Apple is now, and that the demand story is still strong for your family trade?
Well, yeah, I think investors are cheering, the stock hitting all-time highs today because that super cycle did happen, and they didn't outlay all the capex, the billions in capex that a lot of these other tech companies did. They're going to use partnerships, and demand is still there, as Andy kind of pointed out. But I kind of set up that last question, Diane, from Andy, based on the fact that I knew he was kind of maybe looking that way, just based on their data, right? Because it's been really solid and really positive from Likefolio. It's almost like a cash secured put, but I'm going to kind of show you the differences between why it's not a cash secured put. Because remember, this is a $311 stock, so selling a cash secured put, you've got to have a lot of capital in reserve in case you have to buy the shares. So I went out to the June monthly options that expire on the 18th. So you've got 20 days until expiration on this position. And I looked at selling the 305 strike put. Now, you could do a cash secured put, you just sell the 305 put and leave it out there, right? But then you'd have a lot of risk to the downside on that one, and you'd have over $30,000 in capital that you would require, right? Because the stock's trading $311. So, selling the 305 strike put, let's make it a short put vertical because that lowers the amount of risk on this trade while still taking that neutral to bullish bias on this one. So we're selling the 305 strike put, buying the 285 strike put. So basically a short $20 wide put vertical that you're going to collect roughly about a $3.10 credit on it. I think it's probably trading closer to $2.90 right now. The stock has moved a little bit higher. But that credit you collect is what you can make on this. So if you collect $310 is what you can potentially profit on this trade. Now, what's your risk? Well, it's you subtract the width of the short put vertical, which is $20 minus the $310 you collect. So you've got $1,690 in risk. Now, that's your risk on that one short vertical, as opposed to having to have $30,000 for selling one of the 305 strike puts naked without buying the 285 strike put. So those nuances or differences that we talk about. How much risk are you willing to take on a trade like this, and then you can kind of create a vertical that lowers your risk on this trade. You still have a lot of risk, especially below 285, but you're giving yourself that cushion to the downside. That 305 put in the June monthly cycle, you've got a higher probability that it'll be out of the money at expiration, because the idea on this type of strategy is, hey, the stock remains above 305, you sell it for $3.10, and you get to keep that $3.10 if it stays above there at expiration on that one. You got a probability of about 65% that short 305 strike in this short vertical will be out of the money at expiration. So that's why you're collecting less or profitable less on this one versus the amount of risk on it. But turning neutral to bullish strategy, instead of selling the naked 305 put outright, sell the 305 put, buy the 285 put if you want to lower your input costs on this example trade. So yeah, it kind of sets up with what Andy's saying, because if the stock does go below 305 into expiration but remains between 285 and 305, you're still going to have that assignment risk, but you didn't have that initial risk. You might have to buy the shares still if it settles between those two strikes. So keep that in mind also on this type of strategy, but still staying risk defined as opposed to having a lot of risk down to zero.
All right, risk defined there. Thanks, Tom. We've got the breakdown coming up. We're taking a look at NVIDIA. It's gained ground this month. Still some distance from its all-time high. We'll have more fast market after this break.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, that's stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, but now probably mad 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Mom, my grandparents, they know what our family would become.
I don't even know if I could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom of the lunch hour on Wall Street. We are still largely on the plus side. The S&P 500 continues to gain ground. It's better by more than 1/3% as we look to end the month on a high note. Some may go away. They haven't been the case this month. It's more like buy in May and let's play. The Dow's got a gain of 0.75%. Nasdaq 100 higher by nearly 0.5%. Russell 2000 still the laggard, off by a touch more than 0.5%. Shares of NVIDIA are gaining ground today, capping a strong month for the chip giant. The stock up roughly 8% in May. It's lagged the broader semiconductor rally. The Philly stock is up more than 80% this year. Investors are increasingly focused on whether NVIDIA can maintain its AI leadership as workloads shift from training models to running them, opening the door for CPUs and custom chips. Now, NVIDIA is betting on that next phase with its new Vera platform, which the company estimates could represent a $200 billion market opportunity. With that, time now for the breakdown. That's George Phillips, senior market correspondent, taking a look at NVIDIA today. All right, George, listen, NVIDIA had a bad month. Now, it's been solid for it. Obviously not as good as some of the others in the semiconductor space. So how do you want to break this one down?
Well, I mean, this is interesting. I think there's a few things going on that we could make a case for NVIDIA's underperformance. I mean, if you look at the SMH or the SOX index, for instance, it's up about 65% over the last, or year to date. If you look at NVIDIA, it's up about 60%. So it is performing, well, just not well relative to other semiconductor names that are in the CPU stack, and that includes Intel. I believe that one's up over 200%, AMD up significantly, over 100% in the past or year to date. I think what's going on with NVIDIA is just the shift in demand for the technology, and they still lead. They started the lead architect in GPU accelerators. They led the rally in terms of hardware during the initial build-out of OpenAI when they released back in late 2022. And of course, since then, and especially in the last 6 to 9 months for NVIDIA, it recently broke out of a trading range. It's retesting the high of that range, but it had been listing to the sideways. I think what's happening now is if you just look at the context of the technology stack, GPUs is a heavy workforce of technology that is known for parallel computing, where they run thousands of simultaneous calculations. But now we're looking at CPUs and even ASICs chips, and these are chips that are known as application-specific integrated circuit chips. Marvell, Broadcom, those are two names that have done very well, especially Marvell, the smaller of the two. The CPUs and the ASICs chips are looking towards coordinating tasks. And that includes handling operating systems, database management. Look at what's going on this week with database and multi-cloud companies like, if you look at Snowflake this week, servers, and networking and general computing. So, servers, networking, general computing, these are all CPU demand technologies. And I think this is now, it's kind of like a movie. You have the lead actor, and then you have the supporting cast. And we're actually seeing the supporting cast really being built out, being supported. And of course, the technology is broadening out. And it doesn't mean NVIDIA is bad. It just means that the next stack of technology demand is inference. It's the volume of computation, not necessarily which NVIDIA still leads. There's another caveat to this as well, and I think it's important because if you look at what happened when they released earnings, for all intents and purposes, across the board, it was fantastic. 5% increase in sales, beating top and bottom line estimates. But they were allowed to sell the H200 modified chips to China, but China has actually rejected them. So I think that's important in the context of China building out their own GPU supportive technologies with Huawei, for instance. And so NVIDIA still has declared their sales as guided to that also could be impacting potentially the price action with the stock down after earnings.
I love that analogy you did, George, there with it being the lead actor and then the supporting cast. It also kind of reminds me, to kind of use that analogy to a certain degree, like, you have the first season of a popular show and then there's the lead actor there, and then the next season you have some new players that come in and some of them just kind of catch fire. But then there's sometimes a catalyst that pushes that lead actor forward that we then focus back on there. Do you see a quick potential catalyst for NVIDIA that, kind of refocuses this?
Hello, I'm Onika, and I'm a level 1 chef.
I'm Lorenzo, and I'm a level 2 chef.
I'm Frank. I'm a chef instructor at the Institute of Culinary Education. And I've been cooking professionally.
Welcome to Summoner's Rift.
There can be only revenge.
Minions have spawned. I first blood.
Our hatred burns cold.
An ally has been slain.
We trusted.
An enemy has been slain.
down. That is our aim.
Ally has been slain.
We will remember your loyalty.
An ally has been slain.
We must attend to other matters. We go where we are needed. What is started will be
An ally has been slain.
return. We are called elsewhere. Know our pain. Know our choice. We remain true to our purpose. We can be anywhere.
An ally has been slain. Killing spree. Your team has destroyed a turret.
We began as one.
Help if I apologize?
Nothing shall hurt.
Enemy double kill. Your turret has been destroyed. Rampage. Trust is a weapon. His unspeakable punch. We never rest. Unstoppable. Double kill. We are set in motion.
Forgive this failure.
Our will is one. No, we shall return. Your team has destroyed a turret. Our task is unending. Legendary. Double kill. Your team has destroyed a turret. Promises must be kept. Your team has destroyed a turret. An ally has been slain. Your team has destroyed a turret. Legendary. Double kill. Dominating. I must remember. Our hatred burns cold. Legendary. Legendary rusted. Your team has destroyed an inhibitor. Double kill. Legendary. One thought drives us. Has destroyed a turret. slain. Your team has destroyed a turret.
Callista. Yes. Your team has destroyed a
Nothing is more heinous than treachery. We go where we are needed.
Your team has destroyed an inhibitor. Has been slain.
What is started?
Double kill.
Finished.
Shut down. An ally has been slain.
Our spears are precise. We are called elsewhere. Know our pain.
An ally has been slain. Your team has destroyed an inhibitor.
We are not finished with you.
An enemy has been slain. Double kill. Your team has destroyed a turret. Your team has destroyed a turret. An enemy has been slain.
You share ours.
Victory!
What's funny about being in the car is how much space it creates. Space for conversations, space for memories, space to slow down for a minute. People are the destination.
Once you get a taste for something different, different is all you'll live for. Try it. Try different with lots of cool flavors.
Hello, I'm Monica, and I'm a level 1 chef.
Renzo, and I'm a level 2 chef.
I'm Frank. I'm a chef instructor at the Institute of Culinary Education, and I've been cooking professionally for 24 years.
This pork chop is something that I don't cook that often, but I do, my family loves it.
I'm Filipino, you guys. We love pork. This is actually really almost picture perfect pork chops. You're in for something today.
My favorite thing about pork chops, especially pork chops on the bone, is this nice layer of meat in between the fat. But to ensure that they're super juicy, we're gonna brine them first.
So what I'm using today is the center cut pork chop. It's boneless. It's about a ½ inch thick. You don't want to get a thick pork chop because it's going to be too big and it's going to dry out. You don't want that.
Please give me a center cut, bone-in, inch thick at least pork chop. You want something fat. This will just protect it from overcooking.
Today we're using Berkshire pork chops. This is a fatty pig. It's a heritage breed pig. This one is lovingly cared for, fed really good feed and food, and then served up to us.
First, we're going to start with the pepper. Get it on both sides. What I normally do is I let them kiss and make it out. Right?
I will do both sides.
Now I'm going to sprinkle some cayenne and then Old Bay last.
When it comes to a really nice piece of meat like this, I don't want to do a marinade on this. I want to taste the pork. So, one thing that I like to do is do a brine. Basically, a brine is just a salty solution, water, spices, and herbs. So the brine on top of the fat on this pork chop is going to ensure that it's juicy.
No one would not brine a pork chop. I would brine a pork butt.
So I'm going to start off with my water. Apple cider vinegar goes in, light brown sugar, salt, a bay leaf, some black peppercorns, and some chili flake. I'm gonna let it start to come to a simmer, and while that's getting hot, I'm actually just gonna take my time, break it in half, and then I'm gonna get some garlic. This goes right in.
So now you want this to sit for about 10 minutes, just so the spices can just ease on down the road into the pork chop.
You can see it came to a boil, give it one last stir, and now we chill it down.
Some people like to put it in a wet marinade and let it sit, but I think that this is the best way to do it.
I need to marinate in my traditional my friend, I love garlic. Moving on to the Thai chilies. We'll just mince. Thai chili. Just enough for me to actually enjoy the chili as well as
Today we're going to be frying these things up. But before that, I have to work on my coating. I'm going to season my flour. Black pepper, more Old Bay. So my secret sauce is Old Bay seasoning. Normally people use it for seafood, but it's great for me. This one.
I love pepper. And yes, I'm also adding actual peppercorn. That's very traditional in Filipino cooking. Beautiful ginger powder spice, brown sugar. Yummy, yummy, yummy. Apple cider vinegar, of course. Soy sauce. Again, see, this is where the salt comes into play. Oyster sauce. So this is another salty bit right here. It will add some serious zing and beautiful flavor. Lemon lime soda, which will help the carbonation, and the acid helps tenderize the meat.
So just beat up your egg, beat it up. So we're gonna coat it one time with the flour. Make sure that you get it all. And then we're gonna take it and we're gonna twist it. Pretty. You good? Yeah. I feel like I want to dip it once more. I like to dredge them because it gives it a crispy, thick coating. Why have a fried food if you don't have the crunch? You want the crunch in it.
Okay, the marinade is ready for company. So what we're gonna do now is we're gonna allow the pork chop to join the party and
you have earned your
into the lovely, jubbly, spicy, and sweet marinade.
I like to brine in a Ziploc bag. And here's the reason. If I try and take these pork chops and put them in a bowl, only a certain amount of my time, only double the amount of time is going to come in my pork chops. But, as you see, if I take these and put them in a bag, and I pour my brine over, and squeeze out most of the air, they get totally covered by the brine. I'm gonna let these chill in the fridge for about 5 or 6 hours, and then we'll come back and cook.
I'm gonna let these guys rest and watch some TV in the refrigerator for about 2 hours. Okay, now I'm gonna make my sauce that I use to baste my pork chops. Oyster sauce, banana. Very similar to regular ketchup, but it has actually no tomatoes in it. I have sesame seeds. Ooh, check out. Onion. I think I'm going to reserve a little bit here. Extra and lime.
All right, my pork chops are ready, so now it's time to fry them. My pork chops. Let them start frying up. Do you hear it? Oh my God, you're having conversations. What y'all talking about? It's getting hot in here.
Before I grill the pork chops, I'm actually going to kind of coat this beautiful grill pan with some just oil. It's gonna get a little smoky in here, so prepare yourself. And away. Yeehaw! 1 and 2. I love grilling any protein because I love the char that a grill gives you. I love the sizzle, and it's just enjoyable for people if you have guests.
As you can notice here, I am using a cast iron pan. Cast iron is going to give us a good sear and hold on to that heat. We're going to take our pork chops out of the brine. They smell wonderful. We're going to put them on this rack to let them drain. And even though it does have brine on it, I'm going to hit it with a little bit of salt. Just a little. I'm going to drop it in the pan. I always drop away from me. And now we leave it alone.
I'm actually gonna turn this baby up. I want it to sizzle. Whenever I put it on a pan, the temperature goes down. Let's get it back up to 10. I wish I could just take this and put this in a box.
So I kind of quit my pork chops a couple times just because I don't time anything out. If you want to get a pork chop, a fried pork chop, you got to come to somebody's house with a big mama. It takes a lot of women to be able to fry a pork chop is all I'm saying. A lot of women.
That feeling when you check your bank account and your paycheck's days away. And of course, your calendar's all good news. With Chase Secure Banking, your direct deposit hits your bank account up to 2 days faster. So when your friends are like, and your bills go, you have the peace your deposit brings. And the best part, there's no monthly service fee for 17 to 24-year-olds, thanks to Chase Secure Banking.
For Chase Secure Checking only, eligible direct deposits may be credited 2 business days early, depending on when the payer submits the transaction. Member FDIC.
It is a done deal. Look at this.
It is looking so good. And wow! Look at that, you guys. Don't let the dark color deter you.
Let's give this a turn. Getting some nice caramelization. It's a little dark, but I'm not too worried about it. That's just the sugar from the brine. And again, we're just gonna kind of leave it be, let it do its thing.
The top part is pretty much cooked already. It's safe for me to baste. Okay.
We trust
lovely. It's just an extra tang to this beautiful marinade.
So you see that we have this beautiful fat on top. Cannot neglect that, right? So I'm gonna stand them up and hold them there to make sure that that fat starts to render out and get crispy.
My ancestors would just say, do not grill this without having those beautiful sides of fat grilled as well. I'm listening to you.
If I poke at this and it's really still soft, that means that it's really not cooked yet. But if I poke at it and it springs back and feels a little firm, then I know that it's starting to cook up and it's starting to get the temperature that I want.
Cook your pork chop until it's done. Not pink in the middle, not all that little shishi foo-foo stuff. It's a fried dish. Cook it.
Let me just show you what I did. Beautiful, spicy, grilled, Filipino marinated pork chops. Basted in a beautiful sauce. Help.
That's the secret ingredient right there. All right, we got just drain it on the paper towel. Yeah, we're good. We are done.
So I'm close to where I want this to be, and what I'm going to do now is add some of my aromatics here, right? I have a little bit of garlic, I have some thyme sprigs, and I'm going to add some of my butter. I'm adding the whole butter in here, and I'm just going to kind of baste this over the top. And now I'm going to let them rest.
Okay, so with that, you want me to check your temperature?
Now I'm going to make my chimichurri sauce. Now, chimichurri sauce is basically herb sauce for Central South America. What's great about this is we're going to put it on the pork chop. The oil is going to kind of drizzle over the sides and give us some of those nice herby grassy flavors. So I'm going to use all of this down on the top and the bottom. I'm going to run it out. Garlic's going to go in. I'm using a Fresno chili here, right into my food processor. Fresh oregano. Parsley and cilantro have extremely different flavors. Then we're going to hit it with some salt and pepper. A fair amount of salt, some fresh cracked black pepper. And I find with a chimichurri sauce, if you use all extra virgin olive oil, it overpowers the whole thing, and that's all you taste. So I like to cut it with just a little bit. Whiz it up.
So my pork chops are draining. About 30 seconds. Add my flour. And I know this gravy is a blast from the past. And you probably used to have like a little one. I'm going to take a capful, just a little browning. I want my gravy a little thicker, so I'm going to put a little bit more flour in it. And you just, whisk or stir. Look, my gravy has a little bit of crunch in it because we use the same pan.
When you make these, you have a universal on this. Which means you can use it on anything. Tomorrow, I will put it on my eggs and bacon.
So now it's time to plate this bacon. You know, a lot of people use applesauce on pork chops, so I just like a green apple.
I like extra sauce on everything. This
So we got this beautiful fatty, crispy pork chop that we're going to take this beautiful like vinegary and herbal sauce, earthy sauce, put over the top. So that when we cut into it, have a little bite of that sauce.
And these are my
has been slain.
And this is my pork chop.
Turret has been destroyed.
Here we go, guys.
Juicy, it's tender. It didn't take me 20 years. Crunch makes it all the better.
I taste oyster sauce. Sugar, bananas, such a little this wonderful meat heat. It's just
double kill.
Honestly, my heritage in a bite.
Wine does its work. The acid and the earth makes it complement the pork and don't take over.
We're earning unlimited 3% cash back on dining in McDonald's with the Copter on the Saver card. Let's just get one of everything.
Buy everything.
3% cash back on chicken.
3% cash back on dessert. What's in your mind?
Motherhood is hard, and feeling blue is one thing. This may be something more. It could be postpartum depression, or PPD. As many as 1 in 8 women feel symptoms of PPD after giving birth. It can make you feel depressed or hopeless, like you're just hanging on, hoping it will pass. PPD can feel overwhelming, but it is a treatable medical condition. Ask about Zurzuvae, the first and only FDA-approved pill for postpartum depression. You may feel relief starting in 3 days. You take Zurzuvae for only 14 days. Zurzuvae may cause serious side effects like decreased awareness and alertness, which can alter the drug. You may tell on your own if you can drive safely or how much it affects you. Do not drive or do other dangerous activities until at least 12 hours after taking each dose. It may cause sleepiness, drowsiness, slow thinking, dizziness, confusion, and trouble walking that increased risk of falls. Talk to your doctor about alcohol, opioids, or similar medicines while taking Zurzuvae, as they can make symptoms worse and may cause trouble breathing. Call your doctor about sudden changes in mood or behaviors or suicidal thoughts. Tell your doctor if you have liver or kidney problems or are pregnant or plan to become pregnant, as it may harm your unborn baby. Side effects also include common diarrhea, feeling tired or weak, and UTIs. Motherhood won't always be smooth sailing, but if you have PPD, ask your doctor if 14 days Zurzuvae could help.
Pork chops are a delicious dish that can be made so many different ways. Let's see how Onika side chefs made theirs. Onika and Lorenzo both use super pork, also called conventional pork. It's from white cedar pigs raised on farms where the pigs live in close quarters under climate control, and they're harvested young, around 6 months. They're fed a diet of clean water, corn, and soy. Frank used Berkshire pork, a black-bodied heritage hog, which is a specific true purebred. They have been raised for hundreds of years and generations. Heritage hogs are fed diets that allow them to be naturally omnivorous, meaning they eat both plants and animals. They're pasture-raised and free of antibiotics. This meat is higher in fat, very tender, and darker in color, reflecting the diet of the hog, as well as a slightly higher flavor, also flavor, and the meat is so juicy. Boneless pork chop can't go away from the natural. It's a longer section on a hog, 17 weeks, as opposed to beef, 13 weeks. The center loin is identifiable by a T-bone that separates the lighter loin meat and the darker tenderloin meat. Lorenzo also used to chop from the loin, but his has a bone in which acts as a heat insulator, slowing the cooking process and can help keep the meat from curling as it cooks.
If you serve this to your friends, they are not.
Frank's Berkshire pork chops are known for well-marbled fat, so they're going to have more succulence than the conventional pork chops. However, the thicker the chop, the longer it'll take to cook. Frank cooked them to medium, which is perfect for keeping the flavor, aroma,
Pork should have some fat. These Berkshire pork chops.
It's pretty easy to see through the surface of pork, but not as easy to penetrate meat with flavor. Flavors are mainly molecules that are carried by fats, and meat is mostly water, so the flavor molecules don't move inside the meat easily. Lorenzo did a wet marinade that included 7-Up. Most sodas are highly acidic with enough sugar to mask the tartness that's associated with acidity. The acidity helps to hydrolyze proteins and make the meat tender on the outside. Frank made a brine for his pork chops. Brining has 2 main effects on the meat. Initially, salt disrupts the protein structure. It also interacts with other ingredients to increase water holding capacity, thereby absorbing the stains of water in the brine within the meat cells. Since there's more water in the cells, when the pork is cooked, water is still lost to some extent, but it's balanced by water absorbed from the brine. That's why perfectly brined meat is so juicy after cooking.
With modern pork, especially a heritage food like this, you can eat this pink.
Cook your pork chop until it's done.
For a long time, pork was associated with a parasite called Trichinella spiralis that was killed at higher temperatures, which is why people associate higher cooking temperatures with pork. The conventional pork industry essentially eradicated this parasite a while ago, making transmission extremely rare, but the higher cooking temperature stuck with us unnecessarily.
I have no idea what Gravy Master is. I just use it because that's what my mother used. I told you guys. Maybe Rose knows.
Gravy Master is a brown sauce made from blended celery, onion, parsley, garlic, sugar, vinegar, and salt. It's colored dark brown with caramel coloring, and flavor is enhanced by hydrolyzed vegetable protein. HPV is made from protein hydrolysis or breakdown of soy or wheat gluten. It gives an umami taste from the glutamic acid, and it's really convenient to use. It's pretty salty, so you don't want to use too much. If Onika's mom uses it, it's okay with me. Lorenzo used an ingredient common in the Philippines called banana ketchup. It's made with bananas, sugar, vinegar, and spices, and it's naturally a brownish gold color, as you might expect from the bananas, but sometimes it's dyed red to mimic tomato ketchup. It's very sweet and tangy and paired well well with Lorenzo's grilled pork chop. Frank made a chimichurri, which is an Argentinian condiment with an intense and delicious herbal base, with a splash of vinegar for tang and to set the beautiful green color. The slight acidic and herbal combination is such a refreshing complement to his very rich herb pork chop. As usual, Frank really elevated his dish.
I know some people think that cilantro is soapy tasting. I have no idea why. Maybe Rose knows.
There's a genetic component to the taste perception of cilantro. The main aroma compound in cilantro is decanal, a fatty aldehyde that some people's sensory receptors read as soapy or associated with cleaning products as the result of a genetic variation affecting olfaction. Next time you're making pork chops for a quick weeknight supper or for dinner party with friends, we hope you'll take some of these tips from our 3 extraordinary chefs.
Once you get a taste for something different, different is all you look for.
The guy handles the entire home insurance policy setup for you, which can save so much time. So, how about I save you some time right now?
It feels good to save some time. It feels good to guide you.
An ally has been slain.
Our aim does not falter. Our task is unending.
An ally has been slain.
We go beyond. Find us. We can defend.
An ally has been slain.
Is a
Has been slain.
Callista. That was our We are vengeance.
An ally has been slain. Killing spree.
Promises must be kept. Nothing shall turn us from our We had a name once.
has been slain.
We are called elsewhere.
An ally has been slain.
Trust it. One dog rises.
Shut down.
The wounds of the trend never heal. Nothing is more heinous.
Your turret has been destroyed. Shut down.
We began as one.
Executed.
Know our pain. No.
Shut down.
You will be taken.
An ally has been slain. Killing spree. An ally has been slain.
We are set in motion.
Your turret has been destroyed.
Back to back we
Rampage.
We remain true to our purpose. We never rest.
slain. Your team has destroyed enemy rampage. Slain.
Return our speed.
An enemy has been slain.
Our task is unending. We go where we are needed.
Your team has destroyed a turret.
We can be anywhere.
Shut down. An ally has been slain. Your turret has been destroyed. Nothing like over. An enemy has been slain.
Callista. Yes, that was our name.
Killing spree.
We are vengeance.
An enemy has been slain. Shut down.
You are condemned.
Your team has destroyed a turret.
No, we shall return. What is started, finished.
An ally has been slain. Shut down. An ally has been slain. An enemy has been slain.
Must be passed.
Your team has destroyed a turret. An ally has been slain.
Nothing shall turn us from our path.
Double kill. Shut down.
We are not finished.
Shut down. has destroyed a turret. An enemy has been slain.
We had a name.
Double kill. Shut down.
We are called elsewhere.
Your team has destroyed a turret. Your team has destroyed an inhibitor.
We never miss.
An enemy has been slain. Shut down.
None can prevent. We trusted.
Shut down. An ally has been slain.
The wounds of betrayal never heal.
Nothing is more heinous than treachery. We stand as one.
An enemy has been slain. Double kill. Triple kill.
No,
Your team has destroyed an inhibitor. An enemy has been slain. Your team has destroyed a turret. Your team has destroyed a turret. Has been slain. Rampage.
Our aim does not falter. Vengeance is
An enemy has been slain. Destroyed a turret. An ally has been slain. Shut down. The enemy's inhibitor has respawned.
You will be taken.
We must attend to destroy this turret. Enemy killing spree. Enemy double A summoner has disconnected. Summoner's Rift. Minions have spawned.
We had a name once.
First blood.
We never rest.
An ally has been slain. An ally has been slain.
So your treachery ends. We trusted. Nothing shall turn us from our path. The pact remains unfulfilled. Our hatred burns cold. Know our pain. Know that we shall return. I must remember.
Not to fuel up.
Your pain is no more than a trifle to us.
Enemy killing.
We began as one. We are called elsewhere. We must attend to other matters.
An ally has been slain.
Back we stood. Return our spear.
Enemy killing spree.
Know that we shall return.
Enemy rampage. Your turret has been destroyed. An enemy has been slain.
Vengeance.
Rampage.
All things consequence.
Shut down.
Our task is unending. We remain true to our purpose.
Dominating.
Callista. Yes, that was our name.
An ally has been slain.
One.
Godlike.
We shall pierce their shrieks.
An ally has been slain. An enemy has been slain. executed.
Nothing is more heinous than treachery.
The wounds of betrayal never heal.
Your turret has been destroyed.
We can be anywhere. What is started will be finished.
Killing spree.
We had dreams.
Your turret has been destroyed.
We never rest. We trusted.
An enemy is legendary.
We must attend to other matters.
Your turret has been destroyed.
Nothing shall turn us from our path.
An ally has been slain.
Yes.
An ally has been slain. Shut down. An enemy has been slain. Your team has destroyed a turret.
Know our pain. Know our truth. Always remember.
An enemy is legendary. Shut down as one. An enemy is legendary. Your team has destroyed a turret.
We are called elsewhere.
Your turret has been destroyed. Your inhibitor has been destroyed. Shut down. Your team has destroyed a turret. An ally has been slain. An enemy has been slain. Your team has destroyed a turret. An ally has been slain. Shut down.
Back to back.
An enemy has been slain. You have slain an enemy. Your team has destroyed an inhibitor.
We are vengeance. All things have consequence.
An ally has been slain. Executed. An ally has been slain.
Our task is unending.
Your team has destroyed a turret.
We remain true to our
Your turret has been destroyed. Your turret has been destroyed. An ally has been slain. Your team has destroyed a turret. Killing spree. An enemy has been slain. Shut down.
not his late.
Shut down.
Nothing is more heinous than treachery.
Has respawned. Shut down. An ally has been slain. An enemy has been slain. An ally has been slain. The enemy's inhibitor has respawned.
The wounds of betrayal never heal.
Slain. An ally has been slain. Your inhibitor has been destroyed. An ally has been slain. Aced. Your turret has been destroyed. Your turret has been destroyed.
have consequence.
Minions have spawned.
The wounds of betrayal never heal. We are not finished with you. We are called elsewhere. Know our pain. Know our show your weaken the enemy. The pact remains unfulfilled. We began as one.
An ally has been slain.
We never.
An ally has been slain. An ally has been slain.
I must remember. We are vengeance.
An enemy has been slain. An ally has been slain. An enemy has been slain. An ally has been slain. None can shut down. An ally has been slain. An ally has been slain.
Callista. Yes, that was our name.
An ally has been slain.
You have earned your
An enemy has been slain.
This conflict is beyond your
Your turret has been destroyed. Your turret has been destroyed.
We had a name once.
Enemy killing spree.
Such is our vengeance. Nothing shall turn us from our
Promise. An ally has been slain. Shut down. An ally has been slain.
We remain true to our purpose.
Your turret has been destroyed.
What is started, finished.
An ally has been slain. An ally has been slain. Your turret has been destroyed. Enemy rampage. slain.
More haste than treachery.
Your turret has been destroyed. An enemy has been slain.
Trust.
Your turret has been destroyed. An enemy has been slain. Enemy rampage. An ally has been slain. An ally has been slain.
Thought drives us. We must attend to other matters.
Your inhibitor has been destroyed.
We grow.
Shut down. Enemy double kill. Kill. An enemy is legendary. An enemy is legendary. Your inhibitor has been destroyed. An enemy has been slain. Your turret has been destroyed. Your turret has been destroyed. An ally has been slain. An enemy has been slain. An enemy is legendary. Enemy double kill. An enemy has been slain.
Our hatred burns cold.
An ally has been slain.
unending.
Shut down.
The wounds of betrayal never heal.
An enemy has been slain. An enemy has been slain. Has destroyed a turret. An ally has been slain. Enemy double kill.
No escape.
Your inhibitor is respawned. Killing spree. Your team has destroyed a turret.
Our spears are precise. We began as one.
Enemy killing spree.
We never rest.
Your inhibitor has respawned. An enemy is legendary. Enemy double kill. Shut down. Dazed. Has slain an enemy. Your inhibitor has been destroyed.
We are vengeance.
Double kill.
You share in our do not as he did. We are set in motion.
Double kill. An enemy has been slain.
We had a name once. We never miss.
An enemy legendary.
Nothing shall turn us from
An enemy has been slain. Your team has destroyed a turret. Slain an enemy.
Return our speed.
Your team has destroyed a turret. Your team has destroyed an inhibitor. Your team has destroyed a turret. An ally has been slain. An enemy has been slain. An ally has been slain. Your inhibitor is respawning soon. Shut down. An enemy is legendary. An enemy has been slain. Your inhibitor has respawned.
What is stopped?
Rampage.
Finished.
Your inhibitor has been destroyed. Your team has destroyed a turret. An enemy has been slain. Shut down. Your turret has been destroyed.
Nothing is more heinous than treachery.
Your team has destroyed a turret. Your team has destroyed a turret. Shut down. Shut down. An enemy has been slain. An enemy has been slain. Has been slain. Your team has destroyed an inhibitor.
Trust is a weapon.
destroyed. Shut down. Your team has destroyed an inhibitor.
Our will is one. Turncoats, oath breakers, and betrayers. We hate them.
Welcome to Summoner's Rift. Minions have spawned.
We are vengeance.
First love.
Seriously?
We remain true to our
An ally has been slain. An enemy has been slain. Shut down.
Nothing is more heinous.
Double kill. Has been slain. What?
We never rest.
An enemy has been slain.
All things have come. Find us. They disgust us.
High five, Daisy!
Promises must be kept. We shall pierce their traitor.
An ally has been slain.
Bring it down a notch.
What is started, finished.
Killing spree. An enemy has been slain.
Nothing shall turn us from our path. Trust.
Shut down. Rampage.
Our task is unfinished. We are set in motion.
An ally has been slain.
Our hatred curves.
Unstoppable. An ally has been slain.
Yes, that is our name.
An enemy has been slain. You have slain an enemy.
Our aim is not.
An enemy has been slain. Shut down.
We began as one.
Enemy rampage.
We go where we are needed.
Your team has destroyed a turret.
Back to back we stood.
An enemy has been slain. Dominating.
We are called
An enemy is unstoppable. Your turret has been destroyed. An enemy has been slain. An enemy is dominating. An ally has been slain. An enemy is godlike.
The wounds
Has destroyed a turret.
We can be anywhere.
Shut down. Shut down. Enemy double kill.
Turn our speed. We are our spears are precise.
An ally has been slain.
We have names.
An ally has been slain. An ally has been slain. Your turret has been destroyed.
We remain true to our purpose.
Enemy killing spree. Your turret has been destroyed.
One less person.
More hatred. You will take
Your team has destroyed a turret. Your team has destroyed a turret. Your turret has been destroyed. Your team has destroyed a turret.
Never get tired of dying.
Your team has destroyed an inhibitor. An ally has been slain. Your team has destroyed a turret. Enemy double kill. Your team has destroyed a turret.
All things have consequence.
Enemy killing spree. Has been slain.
What is started will be finished.
Your turret has been destroyed.
Nothing shall turn us from our path.
Enemy double kill.
Trust is a weapon.
An ally has been slain. An enemy has been slain. Enemy. Your turret has been destroyed. Unstoppable. Your inhibitor has been destroyed.
Our task is unfinished. We are set in motion.
The enemy's inhibitor has respawned.
Our hatred. Oathbreakers and betrayers. We hate
Welcome to Summoner's Rift. Minions have spawned.
Trust is a weapon. You will be taken.
An enemy has been slain.
Callista. Yes.
An ally has been slain.
You will never suffer.
An ally has been slain. An enemy has been slain. Slain. An enemy has been slain.
Back to back we stood. The pact remains unfulfilled.
An enemy has been slain.
Our task is unending. We are called elsewhere.
Killing spree.
We never miss.
An enemy has been slain.
We are set in motion. What is started will be finished. The oath has been taken.
The wounds of betrayal never heal.
slain.
I must remember.
An ally has been slain. Shut down. Has been slain. Double kill.
We can be anywhere.
An enemy has been slain. An enemy has been slain.
Our purpose.
An enemy has been slain. An ally has been slain. Your team has destroyed a turret. Your team has destroyed a turret.
Know our pain. Know our nothing.
Your team has destroyed a turret.
One thought rises.
An enemy has been slain. An enemy has been slain. Your team has destroyed a turret.
We are vengeance. We must attend to other matters.
An ally has been slain.
Nothing shall turn us from our path.
Shut down. Your team has destroyed a turret.
We had a name once.
Rampage. An ally has been slain.
Know that we shall.
Killing spree.
Our hatred burns cold.
Unstoppable. An enemy has been slain. Executed.
We began as one. We next.
An ally has been slain. Your team has destroyed a turret.
Trust is a weapon.
Shut down. Shut down. An enemy has been slain.
Our spheres are precise.
An ally has been slain. An enemy has been slain.
Rise again. I dare you.
Callista. That is our name.
An enemy has been slain.
We go.
An enemy has been slain. An enemy has been slain.
Back to back we
Your team has destroyed a turret. Shut down. Your turret has been destroyed. Your team has destroyed a turret.
We must attend to other matters.
Shut down. An enemy has been slain. Your team has destroyed an inhibitor. Your team has destroyed an inhibitor. An ally has been slain. An enemy has been slain.
We are called elsewhere.
Should have stayed on tempo.
Enemy double kill. An ally has been slain.
We are set in motion.
An enemy has been slain. Your team has destroyed a turret. has destroyed a turret. An ally has been slain.
The wounds of betrayal never heal.
I must rampage. Enemy killing spree. An enemy has been slain. Double kill. All things have consequences. We can be anywhere.
An ally has been slain. Enemy double kill.
Punched. We remain true to our
Shut down. The enemy's inhibitor has respawned. The enemy's inhibitor has respawned. An enemy has been slain.
Nowhere is safe.
Your turret has been destroyed.
Is the treasury.
Shut down.
They never get tired.
team has destroyed an inhibitor. An ally has been slain. Double kill. Been destroyed. Your team has destroyed an inhibitor.
Nothing shall
An enemy has been slain. An enemy has been slain. An ally has been slain.
Return our sleep.
Your turret has been destroyed.
There can be no justice, only revenge.
Welcome to Summoner's Rift.
Our hatred burns.
Minions force has spawned.
I must remember.
First blood. An enemy has been slain.
Crawl! We are set in motion. We are called elsewhere. We had a name once.
An ally has been slain. An enemy has been slain.
We began as one. We can be anywhere. We are unbound.
An ally has been slain. An ally has been slain. An enemy has been slain.
From our path. We must attend to other matters. We remain true to our purpose. We trusted. What is started will be finished.
An ally has been slain.
Trust is a weapon.
An ally has been slain. An ally has been slain.
Vengeance is at hand. Callista. Yes, that was our name.
Enemy
We
killing
shall
spree.
bring your killers to their knees.
turret has been destroyed. Shut down.
All things have consequence.
Enemy killing spree.
Retribution.
An ally has been slain. An enemy has been slain.
We go where we are needed.
Rampage.
We stood.
An enemy has been slain. Double kill.
We are vengeance.
Your team has destroyed a turret.
Nothing is more heinous than treachery. Die!
Shut down.
Know that we shall return. Our task is unending. We never rest.
Your turret has been an enemy has been slain. You have slain him. An ally has been slain. Killing spree.
Our aim does not falter.
Rampage. Shut down. I must remember. Your turret has been destroyed. Your turret has been destroyed. An enemy has been slain. We are set in motion. An ally has been slain. Enemy double kill.
We began as one.
An enemy has been slain.
We can be enemies.
Your team has destroyed a turret.
We must attend to other matters.
An ally has been slain. An enemy has been slain. An enemy has been slain. Double kill.
To our purpose.
An enemy has been slain.
exhausted.
An enemy has been slain. Your team has destroyed a turret. An enemy has been slain. Your team has destroyed a turret.
What is started will be finished.
An ally has been slain. Enemy double kill. Enemy triple kill. Your team has destroyed a turret.
Know that we shall return. Our spears heed no armor.
They had it coming.
An ally has been slain. Your turret has been destroyed. Your turret has been destroyed.
Callista. Yes, that was our name. Accept no country.
An ally has been slain.
No.
Enemy double kill. Your turret has been destroyed.
It must be here.
Double kill. Enemy killing spree. Shut down.
The wounds of betrayal never. All things have consequences. than treachery.
Shut down. Shut down.
We are not finished with you. We must attend to other matters.
Your inhibitor has been destroyed. Your team has destroyed a turret. Victory!
Alright, boys, that's a good way to end this motherfucking jump. Quandra comeback, boys. Done calling the comeback. I got a nigga named Ice Cube. God damn, we up out of here, bitch.